Hey, welcome everyone. Good morning. Thanks everyone for joining. Welcome to Stock Sniper Trading. My name is Ron. My partner is Dave. It's just after 7 a.m. Eastern. It's Monday, August the 3rd, new month. So hopefully new pips for everybody here. And we're almost getting out of these summer months and moving into September. So I hope everyone has had a great summer trading in these months of June, July, and August. Traditionally, they're not the greatest months to trade, and normally volume dries up at this time, and then things really pick up come September. But it's been a historic year here with lots of volatility, lots going on around the world, and it's providing moves in the markets that a lot of you guys are doing really well. And for some of you guys are still learning, and that's why we're here with you guys. So we're going to do this for another month coming to September, and then come September, we're going to go back into our regular routine where we do a couple weeks in Tokyo sessions, and we're also going to introduce Wednesday webinars with the group back again, and we'll go 2 weeks in New York as well. So we'll be flip-flopping. For this summer, we just wanted to stick traditionally with the New York sessions, and then we're going to move back into the regular routine that we normally do here. So I hope everybody had a great weekend. I hope you guys are ready to get into the markets this week. Just a reminder, it is the first week of a new month, and traditionally we have the first Friday of a new month is non-farm payroll, NFP. So we just had last week our FOMC session. If you guys remember, we had a great session. We took 2 trades. I showed you guys 2 different setups. We took a sell and a buy on 2 different securities, on gold and US30, to show you guys that whichever security you pick, you can always look for a move, and you just gotta follow the rules of your trading and with proper risk management, and you can do good things. Obviously, you might take some losses here and there, but your losses can be controlled and your wins can outweigh your losses. And if you learn this type of consistency over time, you can become a very, very profitable trader. So today, guys, we're going to get into it. We're going to do gold and US30. I know some of you guys have already been trading since London and Asian session, but now we're moving into the the New York markets, and we'll see how everything is moving. Okay, so hope everyone had a great weekend. I'm ready to get started. Let's get into this. First thing is news this week. Okay, so it's a new week. Hopefully you guys went over the folder for this week. We can briefly go over it together. There was some news coming out of Europe this morning. Over here where I am in Canada, there's a bank holiday. It's civic holiday. So we have a day off over here, but the US markets are open and they are moving. So we normally trade the US market, not so much the Canadian market. Canadian news, it is important, but it doesn't really affect the entire global markets as much as the US does. So if we had a US bank holiday here, we would probably be taking a day off, but we're here. We do have some US news coming out. So we have nothing coming at 8:30, right around when the COMEX market opens. What we have is 9:45. We've got some manufacturing news, and at 10 a.m. we do have a high impact red folder today. It's the ISM manufacturing PMI will be coming out at 10 a.m. So this is normally when we're wrapping up the call. And if you're going to continue to trade after 10 a.m., you do have some high impact folders. So just be careful at that time when you are trading, okay? And you guys probably are hearing around the news regarding Japan. There's lots going on with the USD JPY, the crisis that Japan is in right now, and the US dollar is coming in to save the day over here. So if you are trading that currency pair, expect some volatility over here with USD JPY. So our news right now, always we do have news with Iran. Iran's foreign minister, we have no talks with US currently. So Donald Trump was saying all weekend that they're in talks. Iran is begging them for peace deal and things like this. And so far, there's no peace agreement as concrete in the market that we can see right now. So the Strait of Hormuz, last time I checked, is still technically closed. So if you are trading oil, please be careful, okay? And keep up with your day-to-day news with Iran and US and what's going on, because that does really affect the US financial markets, and also gold and oil that some of us tend to trade. Okay, so that's today's news. Tomorrow, Tuesday, Dave will be back in the New York sessions. We've updated our schedule on the website this week, so if you guys want to have a look at all of our live sessions, Dave will be back Tuesday, Wednesday, Thursday. He does the COMEX and New York Open from 8 to 10 a.m. And then I will be coming in post New York right after Dave is done at 11 a.m. Okay, and guys, this is the first week we're going back to where I'm going to be just on YouTube Monday today, and then the rest of the week I'm private with the snipers, and really get to please guys, if you guys are on Zoom, I hope you guys bought a mic or a headset so that this week, if you guys have any questions, you can unmute your mic and ask a question, and I can help you guys out further. Okay, so we are going to be doing that going forward. In the near future, we will come back to YouTube and introduce a second session, a third session, and maybe come back with you guys all week. But for now, we're going to cut it down our YouTube sessions and just keep it Mondays, where we're alongside you guys, and then we're going to go private. So if you want to continue to be with SST and join that private community and get the mentorship that you guys are after, you're welcome to join the team, and you guys will get all of that. Okay. So news-wise, tomorrow, JOLTS job openings. Whenever I see this, that's a hint that we are going into NFP. So tomorrow morning at 10 a.m., we have some JOLTS job openings. It's a medium impact folder. So again, it's hinting to me that we will be going into NFP this week. And midweek Wednesday, okay, a little bit of news coming out of Europe, all of the final services. And we have at 8:15, so on Wednesday, 5 minutes before COMEX opens, the ADP non-farm employment change. Here are the forecast and the previous numbers. You can see that the numbers are lower than last month. So we'll see what the actual numbers are. And then we move into some ISM services, and we do have some speakers on Wednesday from the FOMC. And then Thursday, we move into the markets. Again, lots of low impact folders coming out of Europe. And then we move into our weekly unemployment claims every Thursday at 8:30. So if you guys remember last week, we had 197,000, which was a good number. It was green because the forecast was higher than this. And this week's forecast is, again, in over 200,000 to 205. So we'll see the number. If it's less than 205,000, less than 197, it will come in green. That's good for the US dollar. But if it comes in higher, it will come in red. Okay. This affects the US dollar on a weekly basis because these unemployment claims are released every Thursday morning at 8:30. So we'll see what's going on with that. And then we move finally into Friday this week, August 7th. You can see right over here, lots of red folders. Okay, we have two coming out of Canada, Canadian unemployment change and the unemployment rate. But more so, what will affect the markets is these three US folders at 8:30 on Friday. Your average hourly earnings month over month is looking at 0.3% and no change in the forecast. Our non-farm employment change numbers, okay, and these can be revised the day of. Right now, the previous was, if you guys remember, the previous NFP was disappointing numbers, was 57,000. So that's telling me that they only created 57,000 jobs for the previous month. And again, this is previous month's data. So when I'm looking at this was, it was released in the month of July, so these were June numbers. The June numbers, how much jobs they created, and the actual number that came out in the forecast for this week is 88,000. So they're looking for, obviously, that they created more jobs in the month of July, previous month, much more, about 30,000 more than the previous month. So we want to see this number. Again, if it's above 88,000, come in 90, 100, the number will come in green. That's good. They're creating jobs, and that's great for the US dollar. So if you're trading gold, you can think of the correlation that would be probably an opportunity to look for sells on gold. If this number comes in lower than 88, if it comes in 75, 70, or 65, it'll come in red. But just remember, what it will tell us. It's lower than the forecast, but it is a little bit above the previous month. So then it could get a little, sideways trading action, a little whipsaw. However, if this is just a tank of a number, let's say it comes in 40,000, 50,000, that will come in red, and it's lower than the forecast and lower than the previous previous month that they created. So that would be really, really disappointing in the US economy for job creation, and ultimately not good for the US dollar. And you'll see investors selling the US dollar and moving into other securities or assets. Okay, so you can see that there's a lot of red folders, high impact. And then finally, we have the unemployment rate, which is set right now at 4.2% across the board in the US. And that's in the forecast as well. So we'll see if this changes. Again, the numbers. Unemployment, if this comes in higher than 4.2, 4.3, 4.4, that's not good for the US dollar. That means unemployment is going up. If this comes in lower, 4.1 or 4.0, that's good for the US dollar. Then unemployment is decreasing. So that's high impact. This is very volatile, and this is where a lot of retail traders tend to lose their accounts, blow up accounts, lose a lot of money. Over leveraging, over trading during these times. And this is where I stress that you use proper risk management and you use discipline with your trading. Some traders now that are learning, I can let this volatility pass. I don't even need to trade during the NFP. I can trade after, or I can trade the next week. That's what a lot of traders are finally learning, that you don't have to go all in on this. Okay, you can bypass this like a storm and trade the next day, the next or the next week. Okay, and notice when it is, it's Friday, right? Friday morning. So historically, Fridays are a very difficult day to trade across the board, with or without news for retail traders like you, like myself and you. So let's be smart about this, okay, guys? If you want to gamble, that's your choice, but we don't gamble here at SST. We trade with proper risk management and discipline, and we know that it's just another day with high impact news. If there's no quality setup, then there's no trade. And I know that, and I hope that you guys know that as well. Okay, so that's our news this week. We do have blogs available to read up on what is NFP and how some scenarios and how to go about trading it. That's all available on our website for free for you guys. So I suggest you read the blog as well and get comfortable with what is NFP. Okay. Just some news, what I was talking about, US and Japan prop up the yen in a rare joint move. So both countries have said that they will not hesitate to conduct joint interventions in the future. So the Japanese economy is struggling right now. Japanese yen is hurting, and they are increasing their interest rates, and US is coming in to save the day. So that's, if you're trading that currency, please understand that that's happening right now, and it could get volatile. Okay. The July jobs report, the NFP, will be coming out this week. I just mentioned SpaceX earnings. Okay, so SpaceX, remember, from the highs of $225, was trading at basically $108 last week, and they have their earnings coming up, and so we'll see what their earnings are showing. They're not going to show much revenue, but we'll listen to Elon Musk and what he's saying in forward guidance. So if it could go sub $100, and I'm looking to buy, but I'm waiting for that nice discounted price, because we are not FOMO traders. And we mentioned, do not be exit liquidity on the IPO of SpaceX when we watched it live. And I kept stressing that it will pull back. When? It just takes time. And now if you look back and you reflect, you see it's lost a lot of its market cap and value since then. So if you got caught buying the highs on excitement, you need to learn discipline and understand FOMO trading is not necessarily the best to do. Okay. What else do we have? Stocks rise as Trump calls off the Iran attack. So if you guys remember last week, Trump was saying he's going to attack Iran, and then over the weekend he retracted on his comments and said, no, I'm not doing it now. So we've had a lot of that. If you just started trading right now, you got to get used to this. There's a lot of talks and a lot of BS and a lot of threats, and this is how it affects the markets and causes this volatility. So the oil and bond markets yields ease as we have now decreased tension in Iran. Um, OPEC oil raises production targets. Or if you remember the FOMC we had, raises rethink on Fed policy meeting frequency. What else we got going on? So that's basically what we have happening right now. And just keep up with your weekly news, please, and just keep reading your articles and continue to learn what's going on, guys. We do have a free Telegram channel. It's pinned at the top of YouTube for you guys. It's right over here. So on YouTube, guys, I have the comments disabled on my end. You guys can still talk in the live chat amongst yourselves, but I can't see anything, so I'm not reading it. But I know that there is a free Telegram channel pinned at the top of YouTube for you guys, and it gives all of the live links. There was this video that we just uploaded yesterday on the weekend. If you haven't watched it, please watch it. It's about 30 minutes, and it teaches you, it's just a beginner guide of how to trade gold like a pro, and learn some rules about trading gold. And we'll upload maybe 2 of these type of videos every single week to help with education. These are pre-recorded and will be uploaded on all type of topics. Okay, guys? And everything is available in this free Telegram for you guys. We have a giveaway on Fridays, and all of our live links when we go live, before and afters of the trade signals and setups, and also what's going on with Dave's live sessions in the private Zooms. You'll see also, maybe I'll upload a couple of these of our private sessions in the Zooms this week, and just some blogs, and the giveaways are all available for you guys in here. Okay, that's the free Telegram. It's pinned at the top of YouTube. If you guys can join it, then you can know what's going on with SST. Okay. And then finally, guys, if you do want to still sign up with SST, we still have this going, this 50% off promo, but you can see it's the end of July and we're in August. So this will probably last a couple more days and then it will be removed. So if you want to join the team, you get 50% off on all premium on the plans, and that's where you get everything: the education, the live Zoom sessions, the Discord, the signals, the indicators, basically everything we offer here at SST. You can get it at 50% off. And here is the live trading schedule for everybody. We've got our signals throughout the week. Here's our live New York session today that we're doing, and you can see it's Zoom and YouTube from 7:10. And then Dave will be on Tuesday, Wednesday, Thursday, and then us here, you can see Tuesday, Wednesday, and Thursday we are post New York as well. I don't have the NFP schedule this week because I have to go to the airport and pick up my sister and my brother-in-law and my nephews from the airport early Friday morning. So I won't be available for NFP for this one. Okay, guys, you guys will be on your own, and everything we teach here, hopefully you practice on that NFP. Okay, and then if you click on blogs, here's all the free blogs. So here's the blog on how to trade gold like a pro, complete beginner guide. I don't have time to go over this. Normally I go over the blogs with you guys, but this is there for you guys, whether you guys read it or not. You know, it doesn't hurt my feelings, but you could probably learn something if you read this. And then we have the 1-minute scalping education blog. And then here we have those reports. Here's an NFP, non-farm payroll. This is a blog I suggest everybody reads before, just to a refresher before Friday's NFP, and you'll learn a lot about in this blog, and also give you possible scenarios of what could happen. And if you guys remember the last NFP, we had one of the scenarios play out perfectly. So that's what I highly recommend everybody goes over, okay? And all of those are available for you guys. Finally, guys, if everyone on YouTube can give us a like, subscribe to the channel, we appreciate you guys. We're 500 subs away from a nice psychological number of 105,000, and we do appreciate you guys, okay? And then we'll continue to be here with you guys and continue to give back to the public YouTube community as well. So thank you, guys. I'm going to get into this now. Top-down analysis time. This is the time where everyone should maybe possibly have your own top-down analysis done. I will be doing mine. If you're ready to learn, you can learn alongside myself. You can ask questions on Zoom, guys. Remember, we'll be going private tomorrow. That's where I'll be unmuting the mic, and anything you guys have, I can go over it with you guys tomorrow. Okay. So welcome, guys. Everybody on Zoom. Good morning. I hope you guys all had a good weekend. Tulumi, good morning. Remy, Conrad, welcome. Tammy, thank you for joining. Samuel, welcome. Kai, thank you for joining. Denny, no, I'm not forgetting it's a bank holiday in Canada. I trade more the US market than the Canadian market. Nigel, good morning to you. Bence, welcome, guys, and everybody else on Zoom. I know some of you guys are very shy, but good morning to you guys as well. And from everyone on YouTube, again, I don't have the chat on my end, but I appreciate all of you guys and thank you guys for all joining. The reason why I don't have the chat on, just to, if anyone is wondering, is because I tend to get lose focus on there because there is a lot of spamming. There's a lot of irrelevant questions that have nothing to do with what we're doing, and then I tend to lose focus on there, and it takes away from the stream from others that are actually engaged and ready to learn and focusing. So I did that for myself, not for you guys. I just want to stay focused on what matters most here is the candlesticks, and also answer questions to the guys in Zoom, and they are a priority. Okay. So guys, I'm going to get started daily on gold, top down. So top down starts at a higher time frame. Some of you guys maybe did a thorough top down starting on the monthly, moving down to the weekly, then into the daily. That's fine if you do that too. It's just a more of a higher time frame than myself. I start off on the daily, and then I move into the hourly, then finally into the lower minutes, either the 5 minutes or the 1 minutes. So right now, starting, I can see how gold has been trading like the last few weeks. You can see in here, each one of these individual candlesticks is a day of trading. So I can see like 2-3 weeks, gold has been consolidating and flagging right in this zone right over here. Okay. But when I'm moving from a top down, I can see we are trending down basically. So let's start from the absolute top and work our way down. This here, January 29th, that wick was our all-time high of gold. And again, learn psychological numbers, guys, because it can really help you guys in trading. So when I look at that, it's right at 5,600 basically on the dot, give or take a couple dollars there. And since then, it's been pushing down. Where did it push down to? Let's follow it all the way down to that wick. Okay. And then that is a daily point of interest, that wick. Again, I draw other daily lines with yellow lines. Look at the number as well of that wick. It's right at 4,400. So that's strengthening our analysis at saying that these psychological numbers is where a lot of pending orders are waiting to get activated. Okay. And this happens on all securities. It's a psychological area where a lot of pending orders are waiting, and the reasoning being by why that happens is just auction theory. It's just psychological numbers. It's efficiency of the markets. More orders get filled at that location as opposed to just any random area on the charts. Okay, and let's follow from that. Okay, so from up here, from the all-time high, we can see that where it got rejected. Okay, even if we bring this zone down from the all-time high to those bodies, this is where now I'm establishing a zone, and I explained this in that how to trade gold tutorial that I posted yesterday. So it teaches you how to figure out where the zones are, and you can see there's an all-time high zone, and I can see when it came right back into it, it pushed right back down. And if I stretch this into the future, you can see we're trading down here. We are nowhere near the all-time high zone. Okay, so we are diverging away from it. The offers are outweighing the buyers currently on gold. But we could find some support and it could come back up to that all-time high eventually if something happens. If there is demand for buying gold and there's a depreciation of the US dollar. Right now, we can't say that. Right now, we're consolidating and this could still continue to be a bear flag and continue to sell off gold. And we know that this Friday is a high impact folder of NFP, which could directly move gold bearish if we have good job numbers and a strengthening US dollar. Okay, so right now the market is just trading sideways until Friday of this week. Now following another zone. Okay, so when you see that wick at 4,400, look backwards and price action will tell you everything you need to know. There's no guesswork. I can see right there, that was the previous all-time high, trading right in mid-October. And you can see 4 times it tried to break and then it came down. And then it came back into it when, look at date and time and sales of candles. They'll start to make a story to you and tell you, look at this. Monday, December 22, just before Christmas holidays, it came back up and closed above. You guys know the drill here at SST. When the candle proves to us that it closes above a red zone, we complement it by making it a green zone to illustrate that buyers are populating that zone and it's now being overtaken with pending buy orders waiting to get activated. How do they get activated? Well, the market needs to pull back into that zone. And when you're kind of back testing like I'm doing, now this is showing you how the market after when it closed above, it took 1, 2, 3, the 4th day. The following week, the following Monday, like today, we have a Monday. Mondays and Fridays are very important in the markets. Whether you trade them or not, it's important because that's where markets weeks open and close. And it could help direct where the volume could be moving for that week, okay? And most retail traders struggle on Mondays and Fridays. So, you might have to limit as much as you're trading on Mondays and Fridays and trade the better days inside Tuesday, Wednesday, Thursdays. That might help you guys, be more consistent in the markets. But your journal will tell you everything. I can't just say all retail traders. There's some retail traders that do amazing on Mondays and Fridays, but good traders journal and they learn from what days are better for themselves and what days are not good for themselves. So a lot of traders that journal will figure this out. If you don't journal, you have no idea. So I highly recommend that you guys all journal, and some of you guys don't take journaling serious and some of you guys take journaling very serious, and it's giving you a snapshot of exactly a report of how you're trading. It's like when you go to the doctor. When you're sick, you go to the doctor and the doctor will do some analysis on you. He might do a blood test and figure out what's wrong with you, or do an x-ray and figure out what's wrong with you. You can't just walk into the doctor's office and he's going to just guess. He's got to do some type of analysis. So when you're journaling, you're doing your own analysis and it's telling you about yourself as a trader as to maybe what days are better for trading. I know for me, Fridays used to be the worst days that I was trading. Why? Because I was excited for the weekend. I was over trading. I was trying to make a lot of money before the weekend and I was losing a lot on Fridays. So I started to decrease as much as I trade on Fridays. And then, believe it me or not, my trading got better just by decreasing as much as I was trading on Fridays. And then I saw that Tuesdays were normally my best trading days. So then I started to increase a little bit more on my Tuesdays when I was trading. And that's how I started to make a little bit more money than I usually was losing money. So these are things that, guys, you have to learn about yourself. I can't figure this out for you. I'm not a psychic, but you need to figure this out for yourself. And then you can see it pulls back in, consolidates, and then look at the start of the new year. Right over here, we have the new year, Monday, January 5th, 2026, started off on a bullish note. And that's where gold went up. For the first month in the new year, January was very bullish for gold. That's when we hit the all-time high. And then you can see the retracement came right back in the top of that green zone. Again, if we stretch it into the future, there's a nice little double bottom with a solid liquidity grab. That's an A+ setup. And you guys remember that day started off like how we're starting on a Monday, 7 a.m. It was considered to be Black Monday. It was all the way down here. And Donald Trump at 7:03 a.m. Eastern tweeted that the Strait of Hormuz was open and everything was good. And that was, you can see how how gold reacted after that. Okay, but since then we stretch this into the future, and you can see the big days. Friday, June 5th. Guys, that was the first Friday of June. That was NFP. Okay, remember what we said? The job numbers were good. The job numbers were really good for the month of June. And look at how gold was very bearish and closed below the green zone for the first time. So you guys know the drill. When that happens, when a body closes below, we go through the rules. We make the zone red now to represent offers or sellers populating that zone. And here's backtesting to show you when it came back in, 2 wicks rejected, sellers really pushed it down. Then it came back in with the 4 days of gold being on an uptrend, and then again, rejection, 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 and another rejection. And then there was the next push down. And so that zone, again, stretch it into the future. Look at, we are consolidating right here. We are not too far away from this red zone. Maybe this week it will trade back into here. Maybe we don't. Maybe we continue pushing down. But these zones are above us. The all-time high is really above us, but this one is not too far away. Okay, so let's just continue moving down with top-down analysis. Follow this wick. Okay, look for the most obvious points of interest first. Okay, this should not be complicated or confusing for anybody. Just put the line down and follow that wick, point of interest. Again, do what I do. Look at the number 4,090. Okay, so it's not exactly a psychological number, but it's still at a point of interest. Okay, now again, let's go backwards. Do we see a zone or anything that was created just right around this yellow line or anything in particular? I can see that big daily candle right there that closed above. Look at the retest, yellow line. Look at the big black candle that came down. It wicked off that yellow line. Look at where this was an impulse that came down there, and look at where it closed, at the yellow line. Look at where this day opened, at the yellow line. Look at where when that big black bar is below, then the yellow line should be resistance. However, that big daily candle closed above the yellow line. Then it makes the yellow line again, support, support. This black candle closed below the yellow line. Then you can see it's the wick getting rejected at the yellow line. The wick getting rejected, volume below, volume below. There it turns back up and produces that static line as support. So you can see when that candle came all the way down, that's where the support was, right below 4,100, right at 4,090. Okay, so that is a good lesson or an example showing you of a static line, how a point of interest will always be a point of interest across the board, just depending on the volume, whether it closes above or below. That's how you can determine whether that line will be support or resistance. Again, and this analysis, you can do this on all time frames. So when I'm breaking this down, if you have a point of interest on the 5 minutes, that static 5-minute line could be your support resistance, and you could trade off of that all day, right? Just set alerts and patiently wait for the volume to get there, okay? Just because we're on the daily doesn't mean that this doesn't work for lower time frames. Remember, price action, it shows you all candlesticks have the same characteristics, okay? So that could help you understand that if you learn how to do this, you can do this on any time frame. I'm just showing you on the daily, but these could be 5-minute candles. These could be 1-minute candles, right? There's no difference, okay? Now, let's kind of move down with this, okay? So I'm going to just now show that we are still below this yellow line, even today, okay? We are below it, but we're consolidating down in here. Now, I'm just going to get rid of this consolidated zone and figure out some now more recent points of interest. So our absolute bottom so far, where we've got a body close and a body open, is 3,970, okay? And then below that, I've got a little tiny wick, a wick, a wick, and a wick, okay? So where I have wicks below a zone, I can, make it as a green zone, okay? So that's what I'm doing exactly. I'm capturing those wicks and making it green. See the size of it? It's smaller compared to this red zone, okay? Now, if I go backwards, I can manipulate it. I can look, I'm going backwards alongside that yellow line, and I want to go in the past where we had price action trading right at here. So I can see, look, if I bring it down there just a little bit lower, I can capture this entire double bottom, and that's what I'm going to do. So I'm going to complement it by pulling it down just right there. Look at what I did. Just to the bodies, to the body, to the body, to the body, to the body. And that's where you can see that it was a double bottom. It came in one bottom, back up, second bottom. There's traditionally the bigger move, right? And there was also a liquidity grab at the first bottom right there. You can see the visual wick come down, grab the volume, and double bottom created. Okay, so you see how now my zone is the size of the previous double bottom. Okay, I'm not guessing, I'm looking at the actual physical bottom. Okay, and you can go backwards and analyze. Then look, it was a wick, a wick, and a wick, and it was the top half of that big bullish candle. Okay, so now we've established good supporting zone, and it was a double bottom back in October and early November. We came back into it end of June and early July this year, and it held. But when we came back up, you see that the sellers now are up here. Look at where the sellers are. They're right here. Where? At those bodies, okay? Body, body, then there's a wick and a wick, okay? So I can draw another red zone here. And then someone's going to say to me, Ron, that's a lot of red zones. You have a red zone up there and another one up there. Well, you know, I'm just showing you how the offers are coming down at this zone location right there. You can come down, be a little bit, see what I am? Just a little bit above that yellow line, right to that body, and I capture that wick, and then I come down to those bodies. So I've got that entire zone, okay? Remember, if you guys watched that video I just uploaded, a zone is more powerful than just a line. A line is just a point of interest, right? A zone gives us a type of buffer that it could trade in that entire zone and get rejected. So you see now how I'm consolidating it in the zone and the zone. Now I can see, we can visually see how the daily volume is moving. It's coming down. It moved back up. It came back down, double bottom right there. That's a second bottom. Traditional second bottom should have broke right there. Look at when it came right up there. It should technically have broke through here, but it didn't. So that's telling me sellers are still here. They're still offering. They are still in control. And then they pushed it back down. But as it came down, did it come back down to the green zone? Sellers should have technically broke it down for a new lower low. However, it's building. Now the depth of market is getting a little stronger with a higher low. It came back up last week, Thursday and Friday. And right here, we should have technically opened Monday with a strong candle going through here. But Monday opened and it came down. Sorry, Friday closed down. And today, we should traditionally be moving up, but it got rejected. So we could technically be coming back down, right? Now I'm going to break down these individual candles, okay? So sorry, I had those two wrong candles. It was actually Wednesday of last week and Thursday. And then Friday, you can see when it opened, did the Friday buyers do their job and continue to fill those wicks? The answer is no. You can clearly see it's a lower high wick. Then the sellers came in on Friday and continued to push it down below that point of interest right there of those daily candles and continued to push it down, okay? So now we got to kind of dissect what's going on inside here. So let's follow Friday's volume. It came up and didn't break here. So I have a point of interest right here at these bodies, 4,130. I'm placing a line there, okay? Because if we ever come back up bullish, we might fill those wicks, and then we got to come right back down where that big bearish body opened on Thursday, okay? So 4,130 is a point of interest. We are nowhere near that. So following this Friday's volume, as the sellers came down, there was a point of interest where Wednesday closed and Thursday opened. 4,068 right there, a yellow line, another point of interest right there, okay? Let's follow Friday's volume. It continued to push down. Sellers were in complete control. Look at, they even filled Thursday's wick and got it below those points of interest right there. Those are daily candles that closed and opened right there at 4,027. Okay. Now you see below those bodies, we've got a wick, a wick, a wick, and a wick. So there's a little bit of supporting structure being created right here. And then it came back up on Friday. Buyers brought it right back up and we closed right there. Now we're moving into the weekend. So there is Friday's close and today's open. Right there. Let's see the number. What are we at? Look at the number. 4,050 on the dot. Okay, psychological number. That's how Friday's volume came all the way down, and look at where it closed, like a magnet, right at that psychological number. Then we opened right there today. When we opened, it was originally bearish. It came down black, black, black. There's our low of the day so far on gold. That's my purple line. That's my low of the day so far, okay? And last week we were writing on these, like we can write that the purple line is the low of the day. I know what it is, but for you guys, you might need to write this down, low of the day, just so you're for learning, or if you want to know what these lines are representing. Okay, so and then this yellow line is the opening price today. Okay, and then let's follow the buyers today. When it came back up to the opening price, it was very bullish. How can we tell? Well, look at the candle. It was blue, blue, blue. We got back up to that point of interest. Did it get rejected there? No, it broke through there. It came back up, blue, blue, blue. But that's the highest point so far we're at currently on today's volume. It got up to 4,080. Then it got rejected. So that's so far our high of the day. Again, I always say so far, because the daily candle hasn't closed. We still have 9 hours to go. So it could come back up there, make a new high, and continue go. But that's why if it comes back up to this purple line and makes a new high, I have it at that yellow line that it could get rejected there. Then to those bodies, again, I would continue to do a top down. I would continue to look above. And then when it came up there, sellers are there offering and then continue to push it down. And when you're measuring that candle, it's right around 50% where those sellers are still there and they're rejecting it back down. But we have a little bit of blue volume still left, so it could come back up blue. We could be trading inside here. The sellers could also offer to all this blue volume and overtake it and then turn it into a shooting star, and we break our low, then we'll be filling in Friday's wick. Okay, but I have it marked with another yellow line. If we continue break, then I would catch that wick down there, right? So you got to have some points of interest, right? Where you could move down to. It could move down to there and have your lines justified. You could also write on this one which day it was. So I could put on there, this was July 29 low, the wick of July 29, right? I can make my chart look real fancy and write a lot of things on it, but I know what the yellow lines represent, but sometimes you want to remind yourself of the exact date where you're getting these things, okay? So when I look at now overall, how is it trading on the daily? Okay, do we see a trend? Well, remember, a trend is our friend. What is the overall trend? I see lower from the all-time high, lower highs, lower highs, lower highs, lower highs, lower highs, lower highs. But someone's going to say, Ron, it's not just in a bear trend. It's not in a downtrend. It's been coming up all the way from the all-time highs. Yes, I agree with you. But currently from the all-time high, the sellers are in full control. Let's draw a trend line from the all-time high wick. Bring it down to those bodies. Okay, that's how I do it. You can bring it to the wicks. That's your choice. I bring it to the first touch of bodies and I extend it down. Sorry, let me just do it like this. 1 second. Okay, and I'm going to make it orange to complement that we know that this is the all-time high trend line. Okay, so you see I went from the all-time high wick to those bodies, bringing it down. I can see again when it came in, back down, came and touched it, back down. Just last week, guys, if you remember, gold was it broke, like it impulsively broke, came up there, and then right back down. Then you see, look at now if we follow the volume, we've got blue volume above our trend line, okay? And it's building off of the green box and a higher low and a higher low. So it could definitely continue to rise this week. It could continue to be bullish, bullish, bullish. But look at what we have to break through, the big red block. It's sitting up there, okay? But if the buyers can continue to, we've broken the all-time high trend, so there could be a little bit of a trend reversal, or we see consolidation inside here, but definitely it could come back up here. And again, you know the rules when it comes up here. It could get rejected. It could be an impulse break and fake out and get rejected. It could be a blue candle that closes above with volume, and then we make this red zone green, and then we could be coming up to the next zone. However, it could still sell and, close back below in there, and then we're selling back down. Okay, but that's how it is. We've got daily volume above the trend line right now. So the trend line could turn into a supporting line if you follow trend lines. Okay, now on the daily, I'm going to move into the hourly. Okay, so these are hourly candles. They're structural candles. They make support levels. They make resistance levels. They can consolidate. They can have crazy volume-based candles. If you guys remember, that was Wednesday's FOMC. The first hour was very bullish. And then look into power hour. It came all the way right back down, closed right there. And then again, look at 4 p.m. You can see how it was trading. Then it came back down, then back up, consolidated, couldn't get above the FOMC high. Then it came back down. It's creating supporting levels. That's a higher low. And this is where we are right now. Okay. So when we're following gold now on the hourly, right there is the biggest candle. Okay. That was 6 p.m. That's when a daily candle opens. Right over here, Sunday night, that's when it start of everything. It was very bullish, came up to there, got rejected, came back down. Next hour, 7 p.m., came back up, closed right there. Here's the futures, 8 p.m., got right back up there, equal highs on the hourly, couldn't break. Then it came back down. Then we came down here. I can follow all this volume now, 10 p.m., 11, there's midnight. Here's 1 a.m., 2 a.m., this is an important candle right here, 3 a.m. This is the London market open. It came down, back up. There's 4 a.m., 5 a.m., 6 a.m., 7 a.m. We've got a nice strong bullish hourly candle. And we've got 8 a.m. is COMEX coming up very, very soon. So will this hourly candle get above that daily point of interest, close above? Maybe we're going to go higher to the highest point of day, or sellers are going to still be here to push this thing down. Okay. Do we see any structural candles on these hourly? I don't. I don't really see them. I see them come up, but they're coming into a lot of resistance here and push back down. Okay. I can draw some hourly zones as well. So you can see where hourly zones would be. Okay. And this isn't to confuse everyone. We already have daily zones, but look at where our daily zones are. The daily zone is all the way up here, and the daily support zone is all the way down here. But what we can do is we can continue consolidate this hourly volume. If you see right now, we can utilize the purple line as the highest point of the day as our point of reference. And if I see already, it's retested it 2 times. There's the wicks, okay? I can go backwards now and see that that's where it was flagging. Black, blue, and then push back down. It came back in and back down. It came in, equal highs at the highest point of the day and back down. So that's hourly sellers. They're there. They're holding gold down. So let's stretch it into the future, because if we come back in here, I just want to know for reference that we are coming into an hourly selling zone. They could definitely push it back down. However, we could continue to break and close above, retest this, and then it's bullish, okay? But that is where the hourly sellers are located, okay? And then where are our hourly buyers, okay? The absolute bottom, where we can see it right there, there's hourly buyers there. You can draw your green zone from there. That's where it kind of V recovered and went back up. That would be the ultimate bottom. However, look the last few hours inside here when it pulled back right there. Wick. So I can consolidate it right there and draw my green hourly zone right in there. Okay. Yes, I know that this zone is stronger at 4,025 than this zone, but for a wick, there's 3 wicks, 4 wicks, 7 wicks in here. So it's showing me there was 7 hours of rejections in there. Okay, so that's telling me something. They are building a depth of market on the hourly there and still holding it where it doesn't need to break down here. Okay, so if I extend that now into the future, those zones, you see how we're kind of consolidating the volume right here? And we're trading inside here. Okay, now I'm going to break this down into the 5 minutes. Okay, so when we go into the 5 minutes, now you see the 5 minutes. This is my hourly zone of sellers. This is my hourly zone of buyers. And this is the 5-minute volume, how it's trading in there. So if you're a 5-minute trader, look at what happened. 6 p.m. was a massive bullish candle that came up the first 5 minutes. Then it couldn't break up there. It came back down. It consolidated where? in the point of control of that big candle. Did anybody cut that in half and find the point of control? Then it held, it came back up, couldn't break. Second top, M pattern. Then it closed below the point of control and we pushed all the way down to the bottom. Then it built its way back up and couldn't get back above there. Then it was just consolidating in here. This is where we hit the bottom and now it's coming back up. But anyways, this candle right here, guys, that is a structural candle, whether you like it or not. That first 5 minutes, look at that volume compared to all of the other candles, and it did close above all of this structure. So first thing I do with structural candles, guys, if you don't know, this is a good lesson. Grab your Fibonacci tool from the opening price to the closing price of any bar, okay, on any time frame. I don't care if it's a 1 minute structural candle. If you're a 1 minute scalper, you should be doing this. I don't care if you're a 5 minute trader, you should be doing it. I don't care if this was a daily candle, we would be doing the same thing, okay? What do? I locate half of it, 0.5. It's right there, right? There's the halfway point, okay? So now I see when it came down, it held above the halfway point. However, I draw a zone when it's a structural candle. I give myself a buffer, not an exact line. And there's the buffer. How do I know that? Because the Fibonacci tells me the 618382, that's basically the golden zone. You can call it the point of control. You can call it whatever you want. And then we see, now here's evidence. When it came back in there, look how it held in there, held in there, held in there, and continued to move back up, okay? If you bought that, that's fantastic. You made some money, but you got to understand, it didn't break these highs. And then it's the second top. Then it comes back down. And look at what it did. It traded right back again into that zone. However, this candle bar right here at 835 closed below that point of control. So same thing what I'm doing when I'm scalping the markets. I make it to a red zone and I just continue into the future. Then you can see when it came in, it's sellers now on the lower time frame have control. Then they pushed it down in that hourly support. It's building at the lowest point of day. And what does it do? It comes back into this consolidated zone. That was a brief fake out where it did close above. But again, when it comes down, we're looking for a wick and a retest to break. That would have been a nice candle. Short wick, I would have bought that and I would have taken it up there. But you can see it came down and closed in the red zone. Then it consolidated again. There's another blue candle, closes above. So when that happens, guys, just flip-flop the zone, right? And then it closes above and holds. And it did move a little higher, but you can see we're not engaging back in the red zone. And this is, I don't like trading this volume. So this was like at midnight. I'm not trading at midnight, right? So, but if you are, that zone is still a zone. We can stretch it, stretch it, stretch it. And look at, we're trading right back into that zone now. And that zone is still, it's red. Okay, why? Because it closed below, came back in, red, came back in, red, bottom, came back in. Now look at it coming all the way. Now we're trading right back in that red zone, okay? So I stretched that red zone into the future. So what we could do as scalping right now is we're gonna look for blue candles to close above here. We have our daily point of interest right near us, okay? So if we close again blue like this, we'll flip this red zone green. If we're building, we could go into a buy and see if we can come and trade back into the hourly resistance and the high of the day. If the sellers are still here, if they close it below here, then it could push it right back down to this green zone, okay? And this is scalping, okay? And if you don't want to scalp this area, then just wait for gold to make a move either at the highest point of the day today or the lowest point of the day. It will, okay? Why? Because there's liquidity above and below today's, and it's very consolidated. It's not like it's a massive, big standard deviation from the high and lows of the days. It's not. It's very, very tight and consolidated today. So there could be an attempt to come and break today's high of the day liquidity. There is liquidity up there. There is liquidity above here too, but there's bigger liquidity at the highest point of the day. Because look, right there, when it tried to break and grab that liquidity at the open, it wasn't successful. When it came in for the second top up there, it wasn't successful. When it came in again, lower highs, so let's pretend that there's liquidity above there still, okay? Does the market want it? Absolutely, because there's big orders waiting, pending at the highest point of the day. There's all orders. There's buy orders that want to get it triggered to take it, continue through here to 4,100 and beyond. And there's also sell orders that want to get filled and bring gold down, okay? So when I say that there's orders above the highest point of the day, there's also orders and liquidity below the lowest point of the day. Where? Here, because we can go backwards. We can see, did it come down here and get that liquidity? No, it moved up right when the day opened. When it came down there, did it break to grab that liquidity? No, it held and went back up. When it came right back down there, did it break to grab that liquidity? No, it held and went back up. Right there again, did it come back down? No. So there's liquidity below us that is waiting in the market to get activated. The market makers know that there is large liquidity pending in there because they're pending orders, right? Eventually, if the market wants it, it will come and grab that liquidity. It will grab it, maybe close above and continue to go up, right? That's an option. Similar option is if it comes down here, it could come down, grab that liquidity. This is a red zone, and then it sells down. Okay, those are options, right? Another option are, what about liquidity fakeouts? What are those? Let me show you. Okay, it could be one of this. It could be come up there, grab it, but it doesn't close up there like that first arrows I showed you. It's a wick. It gets rejected. It grabs that liquidity and it comes back and it closes below the red zone. Then we know that they grabbed the liquidity and could sell it back down, right? Come up, grab that liquidity on an impulse, come back down and close below, and then we short it down, okay? Same thing could happen on a fake out to the bottom. If it comes down, it could grab that liquidity, get a rejection wick, go back up, close above the green zone, retest it, and then we're coming back up there. Those are the fake out options, okay? So remember the first arrows I showed you? I showed you a confirmed candle closing above and retesting the opposite zone and going in that intended direction. However, the market can fake us out. So we have to understand the fake out moves. And then finally, the third other move is it could come up to the zone and just get rejected, where it comes up blue, 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 just like here and here. It could come up there again and be like a third top in the red zone and then go back down without even breaking to grab that liquidity, okay? And it's very similar on the bottom. This could happen as well. It could come down, pause right there, just like it did there, hold support, and then continue to go back up, okay? So those are what we need to look for today. And what do? I put alerts in these zones. How do I do it? I can simply do it with a red line or white line, whatever you want, okay, right there. Cut it in half if you like, or place your alert right at the bottom, halfway, or at the highest point. I like putting it right halfway point, okay? Right click, my alert is added. So anytime today gold comes back up to this level, I will get alerted for a high probable setup, not for just trade blind. Again, I look for those three options I just showed you, okay? Again, I can do the same for down here. I can place an alert down here. If it gets down there, I will get alerted. I don't need to sit at my computer all day today and watch this. I can literally let it do what it wants to do, and then I will get alerted when it comes up here or here. Otherwise, it's just gonna trade from down here, 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 here. Is that good trading? No. So, I want to wait, okay? I know that today is a Monday, right? It could just continue consolidating here and do exactly what it was doing for the entire night. It's just in a range, okay? I'm waiting for quality volume to trade. I'm waiting for something to happen at these liquidity areas. We might have to wait for COMEX in the next 12 minutes. We might have to wait for Wall Street to open up. Who knows? But let's continue to watch this. Does this make sense, guys? Do you understand now? But if you want to scalp, okay, yeah, look at, there's a move already. It came in the red zone, got rejected, and then pushing down. So that's a pretty significant size candle. Is it a structural candle? No, it didn't close above like all of this structure. However, it's a big bullish candle. That's a simple candle. You just cut in half. And if it continues to hold above, then you see how we've consolidated from this red line to that red line, okay? Gold is not just going to continue to trade in between these red lines, okay? When I'm looking for a scalp, I know that it's going to build. It could break down sellers. Then they sell it down to here. If I want to take that, I'm measuring the move. If I want to go into a sell from here to there, that is 60 pips. If it gets down to the midpoint, 90. If we get down to the lowest point of the day, it's 100 pips, and then it could reverse right back up. Okay, so if I'm taking that scalp, and I'm getting down to those bodies, 40 pip, and I know that it could find a wick there and come right back up, okay? Just like if I'm going to scalp it above. If I'm going to scalp it above here and we close and we fill that wick, we're going to get up to that daily yellow, that's 50 pips, okay? It could come right back up there and get rejected back down. If we break above there, then it's filling those bodies right there. I know exactly what I'm looking for, 84 pips, okay? Do I want more? Absolutely. Who doesn't want a gold trade to continue to go up there? But we can see in the past, we've got a daily resistance. We've got a double top on the 5 minutes. We've got the high double top on the highest point of the day, okay? There's a lot of offers above us that we need to continue to break in order to get that liquidity, okay? But if you're a scalper, you could be scalping smaller moves, right? If you don't want to scalp small moves, then go a smaller size, either go in a buy or sell, but give yourself more breathing room by adding a larger stop loss and wait for the intended move to happen, okay? So we are 10 minutes away from COMEX. And then close to 9 a.m., I'll do a top down on US30. We'll get that out of the way as well. Not right now, because we're going to just follow into COMEX and we'll watch that. So if you're just joining us, welcome. If we go back to Monday, do we have any news coming today? Nothing, just the COMEX market open. Again, it's an important open. This commodities exchange opens up at 8:20 every single day, Monday to Friday, after a weekend. We have an all-day bank holiday here in Canada for civic holiday, but US's banks are open and ready for business. We'll see how everything's going. Near the end of our call, 10 a.m., there's a high-impact ISM manufacturing folder, so pay attention to that as well, okay? This is what we'll be watching, okay? And then finally, sorry guys, if you want to add indicators on your chart to complement what's going on, you're welcome to do that. I add a 9 EMA, okay? So we're trading right at the 9 EMA currently. The 200 EMA, we're right at the 200 EMA as well, okay? So when these two lines are overlapping, like right here, it tends to get choppy. We need one of these, we need this green line, the 9 EMA, to either cross above the 200 and diverge away, then we could see bullish momentum. However, if the 9 stays below the 200, it could continue to be bearish, okay? And you can see that there was some crossovers here, and that's how high it went. Then it came back down. So if you're just following indicators alone, yes, you can buy and sell off of it. However, they're just indicators, right? They're not the holy grail of trading. They're there to just complement our analysis and our charts, and to maybe if you're looking for a buy, is the volume above both of these, so something like that. If you're looking for a sell, is the volume closing below the 209, might give you a conviction to maybe sell the market. And then finally, guys, if we want to add like a SST daily indicator bar on our chart, sorry, right here. We can put this higher time frame candle on anything above a 5-minute candle. So if I want to put it on a 15-minute, I can. If I put it on the hourly, I can. If I want to just keep it on the daily, I can. So then it reminds me that this is the opening price right here, this yellow line. So if it comes back down there, that's the opening price. I know down here is the lowest point of the day, the purple line right there. And I know if it comes back up, we're filling the daily wick up to the highest point, okay? But I also have my 5-minute structure while the daily candle fills, and I can see all levels, okay? If you do use the RSI indicator, the relative strength index, you can put that on as well, and you can see where we're at. We're right at 50%, the psychological midpoint again, okay? So that's where the strength is even. When we're up here, 70 or above, it's considered to be overbought. When we're at 30 or below, it's considered to be oversold. When we're right at 50, it's neutral, right? Any strength can come in. It can get weak and it can push down, or it can gain strength and try to go back up, okay? So if you're using an RSI indicator, you guys know it oscillates from 0 to 100, and if we're cutting it in half, 50 is the exact halfway point, and that's where we're at. The 70 and the 30 are just letting you know if it's above 70, it's overbought, and if it's below 30, it's oversold. Okay, but this oscillator moves from 0 to 100, and there's the 50. We're exactly at it. So we're at the psychological midpoint of it. Okay, now we do have a big bearish candle coming in. Good morning, Justin. Welcome. Simon, US30 might want that all-time high. Potentially, yep. We'll get to US30. We'll do the top down, but it's just a few points away from the all-time high. If we look at it on the monthly or weekly, like if we look on the weekly, guys, that was the all-time high wick right there. The first week of July. It's right there. Okay, that's the all-time high of US30, and you can see it is filling, and it's just got that little bit more to fill, and it will have a new all-time high. Okay. If you look at it on the monthly, right? Again, this is just a new month. It just started right now, one day, but it is a bullish ignited open. And it's got that candle wick to fill, and it maybe potentially break higher. And on the hourly, you know, you can see it's inching up there. We'll get to the analysis of US30 in just a little bit. Okay, so I'm just going to clean up my charts here, and we're going to watch. So right now it came back down. Let's follow that black volume. Came down, closed. Did it close below 50% of that blue candle? Yes. Did we close below the 9 EMA? Yes. This red line, which was the halfway point of this bullish candle, was illustrating that it would be support, but now that we're below, the red line will illustrate resistance. So if we come back up blue, we could get rejected at that red line, and sellers could therefore push it down further. Okay, we got to see if this candle will come back in and close above the red line. If you want to entertain a buy or sell trade right now, just reminder, you're about 3.5 minutes away from the COMEX market open. Okay, so that's where things can get volatile. Like, let's say, for example, you're going to sell, it could be a blue candle that just opens up and goes up. If you go in a buy, it could just be a black candle that comes down. So whether you want to trade right now, even if you do have a good setup, you maybe just got to hesitate to take that trade, because it's just like Wall Street. If it's 927 and you see a nice trade on Dow or NASDAQ or S&P or gold, and you take it, you have to know that the Wall Street is opening up. It's a large exchange with a lot of volume and a lot of volatility. And even if you see a good quality setup, you never know what could happen when that market opens or that bell opens. It could be very volatile, and it could fake you out, grab liquidity. You have the intended direction, however, it stops you out because it's a bigger volume move, and then it stops you out and it moves in that intended direction. So in my opinion, it's best to wait for these type of exchanges to open up before taking a trade. You might be already in the trade prior, and that happens. But if I'm looking to just trade right now, I hold off because I know it's 2 minutes, okay? And I don't want to make a mistake, right? That's where a lot of mistakes are made. We get excited and we go in, we take a buy or sell 1 or 2 or 3 minutes right before an exchange. And this is for all exchanges. This is for COMEX exchange. This could be for Wall Street market open at 9:30. This could be you take a trade right before a high impact news event, like at 10 a.m. We have ISM manufacturing and it's 9:58 and you take a trade. You have to account for that news coming in. Whether you trade the futures market at 8 p.m., it's like 7:58, 7:57, you take a trade. London market opens at 3 a.m. That's like taking a trade at 2:57, 2:58, right before that market opens up. And I just advise that I personally hold off. I don't know. And then someone will tell me, Ron, I take it always 2 minutes before the exchange opens and I do good. That's fine. If you have a good track record and you do it, that's fine. But most traders, if you just trade a couple minutes before an exchange open, it's just going to get volatile. I'm not saying whether you're going to make money or lose money or get stopped out. It's going to get volatile. Where the candles are normally this size, they might get 2-3 times bigger. And it could amplify your wins and it could amplify your losses. So what I do is I just hold off. That's it. And then I wait for the exchange to open up. I see what's going, I look for a pattern that I recognize. Okay, so I see it came up and it's coming back down. Okay, so if it comes back in when the exchange opens up and goes back down, I could sell it down like a double top, right? I could maybe get a better sell order here than to sell the lowest point. Because if I sell now and it goes up, I'm in drawdown. Or I could be waiting to sell up here. And if I sell down there, I'm maybe selling at a premium area, reducing my drawdown and going directly right into profit. So to each is their own. You know what I'm saying? Like, you got to figure out what works best, but I'm just trying to let you know that most mistakes are made. And when I say that, I'm not saying from you guys, I'm saying me. When I trade a couple minutes right before an exchange open, normally I get stopped out. I've journaled my trading in the years, and now that's why I hold off. But if you do well taking the trade right before the exchange, that's fine. You know, it does work. If you're in a sell, it could continue to sell down. But now we have the exchange open. So is that a big bearish candle? Yeah, if we just cut it in half, it opened ignited, so there's no wick. So I see that it is pushing down. So technically, what we should see is sellers come down and grab this liquidity. We're not too far away from breaking today's lowest point of the day. So we should technically see a break of the low of the day. If we see it reverse back up, then we know that the buyers are still holding the lowest point of the day during the COMEX market exchange open. Okay, then maybe we can see how strong these orders are in here. Okay, so it came down right down there. It is a higher low coming back up blue. So when it comes up blue, we want to see how it will react at 50% of that previous black candle right there. Okay, so now it's coming back up blue, blue, blue. This is where we should see maybe a potential rejection. Okay. There is a wick there, rejected right at that 50%. Now we got to see. Now it's going to be a battle between the buyers and sellers right here, exactly at the 50% point of that black candle. And this is the first 1 minute of the COMEX market exchange. Okay, and please, everyone, check your spreads if you are entertaining a trade. Don't just trade blind. Look at your spreads. Some of you guys are trading futures and you don't have spreads, I understand. But for the Forex traders, have a look at your spreads. Make sure you don't have the improper lot sizing in. Maybe you were trading on Friday and now you're trading again. Double check your sizing. Okay, that's another mistake you and I tend to make. Check your sizing. And everyone on YouTube, I hope you guys are doing well. If you can leave us a like and subscribe to the channel, we do appreciate it. We'll do a top down on US30 in just a moment. And but we're just watching gold here at the COMEX market open. Okay, so it came right up to that 50% point, right? I'm not guessing, I'm just looking at 50%. The sellers are still there and rejecting it back down, but we still have blue volume holding. So we might have an indecision candle. It might come back up and close very bullish near the end of the candle. This is half of the candle is exhausted. We still have the second half, 2.5 more minutes. Sellers could continue to push it down and then target our low of the day. And then we'll see what happens at the lowest point of the day. Will it be a liquidity grab? Will they close it below? Will the daily candle start turn bearish and gold starts to sell? Or will it reverse back up? But we're still technically right at the opening balance. Still above it, still holding. This is an indecision candle. This is what we call a spin top. So if you remember when it opened, it was initially bearish, bearish, bearish. Then it came back up to the opening price, came back up to 50%, got rejected, came back down to here to the opening price of the candle, came back up just now. They rejected it back down just now. And did you see how I identified the resistance just by cutting that black candle in half? And it's already showing me the resistance. Okay, so that's just telling you the psychology about volume, the psychology of a candle. And the only reason I know this is because I've studied over 1 million candles in my day. Imagine how many 1-minute candles I look at every single day. So it's not just by chance why this happens. It happens on a regularly basis on all time frames: 1 minutes, 5 minutes, 15s, 1 hour, 4 hour, dailies, weeklies, and monthlies. Okay, so now we're closing in 30 seconds. I always say too, the last 30 seconds are very important on a candle. Why? Because it shows the momentum of who is going into the close, the buyers or sellers, who has the momentum, and it could tell us how the next candle could potentially open, right? So we got to follow the momentum going into the close. This candle doesn't have too much momentum. It's still got a lot of indecision. Okay, so now I'm zooming in to go right into the close. So the close right here with a little bit of blue volume. Okay, so open bullish ignited. And as soon as it opened with that blue, it's turning black. So there is some sellers right here trying to push it down, still holding blue. So technically, if the candle blue does its job, it should fill that wick and drive up to the opening balance of the black candle that opened at 8:15. Okay, if we see that this red line is still holding up and pushes this down, then the sellers could come back down to trade into here. And this is where it could be consolidated. Remember, I say it takes like 2 candles to identify where it could consolidate. Right here, we've got some consolidation. Okay, so it came blue, blue, blue. Did it fill that wick? Answer so far is no. It's a lower high and getting rejected. Now it's coming back down to the opening balance. You remember open bullish ignited. They've just lost that opening. So sellers now could come down black and take out this candle. But before it takes it out, it's got to revisit 50% even of that volume of that candle. Right there where my cursor is, it's right at 50%. So that's showing it's a weak open for the buyers now. So sellers could come down, fill that wick, take out that, and we're not too far away from breaking that lowest point of the day and maybe technically grabbing that liquidity. So if you want to sell, you could potentially look for a sell, but this is where the neckline could be, or the support area, or the consolidation. If we buy or sell right here, we're right in the middle, right? If we look at the overall pattern, it came up, it came down, right? We haven't came down to here yet, but if we buy or sell right here, it could like if we sell, it could technically go back up to here. If we buy, like right now, it could technically come back down here. So I would, as much as I want to trade this area, I'm holding off because it's just where we are right now. But if I had to choose, I would maybe lean towards selling, but I'm not. We're right at that opening balance. It could hold in here, but that liquidity looks appetizing down there for the sellers to come down and grab. Let's see if they do it. And if the buyers are here, their job is to protect it from coming down and grabbing that liquidity and build this green zone, build it with higher low and continue to consolidate up here and come back up to protect it from breaking the lowest point of the day. We're still kind of consolidating here. See, that's why it's not a good area to trade in here. We're still in that consolidation. Maybe we see if a blue candle can close above here. Maybe we'll see if the black candle can come down and take that liquidity down there. Not the greatest of open for the COMEX, but this is how it opens, right? If you're a little bit more disciplined and you're not taking trades, you can start to see how it's building. Okay, so did the sellers fill that wick and come down and grab that? No. So it's building a higher low, but the buyers are failing to create a new high. That's why we're in this consolidation. That's why I drew this zone, this neutral zone, where we're just buying and selling inside here right now. Is it going to stay in here all day? No. And now we're back down. If you look at the daily candle, we're all the way right at its opening balance. Exactly 4,050. Okay, that was our opening balance, yellow line. And we're only $5, 50 pips away from taking out the lowest point of the day, which could definitely happen. What do you guys think? Do you guys think we're going to come down and take out the lowest point of the day or not? Or do you think it's going to build and come back up without taking out the lowest point of the day? What do you guys think? And on YouTube, guys, I apologize. I don't have the chat to see what you guys are saying. But if you guys want to talk amongst yourselves in there, you're more than welcome. Benz, you think the liquidity will happen? Well, we're not too far away, okay? But we're now barcoding blue, black, opening up blue again. However, we got a lower high, but we got a blue bullish ignited candle coming back up, okay? So that could be they're right at the opening balance again, so they're still holding strong. Okay, but we got to see, you know, a blue candle fill those wicks and at least create a new high, even if it's a new high on an impulse and then it gets rejected down. Wow. Okay, did you see that? How it was blue ignited, blue. As soon as it came up there, got rejected back down. So I still see a lower high. So a lower high. We're still technically below the 9 EMA. So this is where we're not too far away from coming down and taking out that lowest point of the day. We might actually get a black candle close below this opening balance. I'm going to go in a sell. I like the rejection. I like the shooting star. I want to see if we can just continue to fill down and take out that lowest point of the day and maybe grab that liquidity down there. Okay, so I'm going to sell on gold. My stop loss, I'm going to place it just above the body of this candle right here. Prior to COMEX, 815. So my stop is just above that high. Okay. I could be above those wicks, but I'm going to give it some more room because I want to see if it can take out that lowest point of the day. Okay, so I'm going to sell on gold. I liked it, how it was holding, bear flag, continue push down, lower highs. Now let's take that out and see if we can get down to that purple line. We've already flipped the daily candle bearish. Maybe we'll get a first 5-minute candle that will close below. We could use the yellow line as the opening price to be our resistance going forward to maybe push down further. Okay, so let's measure the move. Okay, from here down to the red line is only 20 pips, right? We're not looking for that. We want to at least come down to the purple line, which could be 40 pips plus. And if we break, then we're looking for 50, 60, 70 pips down there. Okay, so we're this close to that liquidity. Can the sellers come down, push the market down, and engage in that, okay? So that's 20 pips down to the red line. Some traders already want to lower their risk or go to a break even. You can. I'm not so far. I want to see if we can get down there. The daily candle has flipped as a bearish pin bar. We're trading at 4,048 right now. Can we get down there? Can we get a strong close with this black volume? Again, we have 2 more minutes to go. So it's rejected at that yellow line. And I can see the yellow line is the wick of that candle that started at 730. Okay, so 730 was a strong bullish momentum move. Can we get back down there? We just touched it, so it's basically like an equal low at that 730 low. Can we get back down there, close with some volume, and continue to fill down? So now it's coming back up to the opening price again. It's flipped back in the consolidation zone. So it's back to black, blue, and I gotta now watch the closing price. Look at again how it's flirting right at that opening yellow line. So this is the big battle of this daily candle. Buyers are still there, preventing it from breaking down to that lowest point of the day. And we have 1 more minute to go into the close. And that's a spin top candle, right? Lots of indecision. You saw how it opened, it came down, then it reversed back up. Now we're going into the close. Who has the close going into, who has the momentum going into the close? Last 30 seconds. I always ask that. We're now at that 30-second mark. Buyers now have the momentum in the close so far. So they could carry this momentum into the next candle. And that's what I got to watch for because I do have a stop loss above. So they prevented it so far from breaking down right there, exactly at that red line, just above, wow, 20 pips above that purple lowest line. Okay. So there's the close inside. It closed blue. Buyers have the control after that rejection, right? So the sellers need to come back in and close it below there. However, the opening price is now support, so it could continue to build back up. Originally, I was going to keep my stop loss just above those wicks, but I gave it more room to breathe. That's why I said I'm above the 815 open. Okay, so I'm currently just in a little bit of drawdown, but want to see if the sellers can continue to come back down. Like this is a tug of war. If you and I were playing tug of war, you pull me, I pull you. You pull me, I pull you. Eventually, one of us is going to get tired, and eventually, one of us is going to lose. Okay, so I'm betting that we can come down and fill down to lowest point of the day and grab this liquidity because it's not too far away. But if this holds up, then you can see that the opening price is strong, the lowest point of the day is strong, and then buyers could come in and start to fill up the wick back up to here. So it's tough. It's a tough call. You know, but we got to watch the closing price here. I don't have a lot of risk on this trade, right? So I can withhold a little bit of drawdown here. I'm not leveraged. But ultimately, the closing volume will dictate what happens here. And you can see it's a battle between buyers and sellers. Okay, sellers are coming back down now. So their job is to continue to fill that wick and come down to that purple line and grab that liquidity. Okay, we can still see they are protected with lower highs, lower highs, lower highs, and lower highs. But they have a job to do. They got to fill that wick, right? We got to create a new low. Because if we don't, buyers step in and then they bring this volume back up, okay? So I'm back again near that 20 pips of profit, but that's not my intention on this trade. The trade is to take out this purple line, and then I can maybe reduce my risk and grab that liquidity and take 50, 60, 70, 80, who knows? Maybe if it closes below, this could be a big drop, and then we have a daily candle flip. Okay, but sellers now are in control, technically, with a new lower low, but let's see what happens if they can get it down there. Even if we close with volume below the red line, we could make this red line our resistance to continue to come down. I hope that this is like a liquidation structural candle that could continue to come down and close below, and then we can find the point of control of this bar while we're in profit and maybe move down with it, okay? But we got to know that there's going to be maybe a potential rejection down here if they save that lowest point of the day. It's not easy to sell at the lowest point of the day, and it's not easy to buy at the highest point of the day when you're trading, because this is a daily level where they've established the lowest point. So it's not easy to break this. But if it breaks, there could be a substantial drop in the market. And when you're already in a sell, that's how we benefit from it, okay? So we've got a minute and 45 to go, right? It's good volume. Sellers are technically in control, but we have not finished our job. You know, like when you play Mortal Kombat, you got to finish them. We got to have our finishing move. We got to take out this low. Oh, by the way, guys, Spider-Man movie, we saw it on Saturday with the family. It was amazing. Spider-Man, the Brand New Day movie, was amazing. Amazing movie. Oh my goodness, we're right at the lowest point of the day. With 1 minute to go. this red line could technically be our cut point. If we can get a little bit more black volume close below there, that red line will technically be the 50%. Watch, guys, you know. It's not my first time I've seen this, but we'll see. Holy, we didn't break that lowest point as of yet, okay? That dropped down to there about 40 pips in profit, okay? But oh man, we're almost there. Holy shit. 30 more seconds. Let's watch the momentum into this close. Christoph, low of the day is your TP1. Nice. Okay, guys, 10 seconds to go into the close. Let's go. 4,046. Okay. Okay, so they got rejected back up. So this candle could open blue with that rejection. No, it's black. Okay, so can it come down black and fill that wick and just break a new low of the day? The red line, which was those equal supporting zones, could be our resistance. There we have the black out there. So we just broke for a new low of the day. Okay, so now let's see what's below my purple line. Okay, look at the next zone of support right there, right there. You see double bottom and a lot of wicks right there. So that red line is 4,042, 41, 42, right where that liquidity is, right where I have that money sign, right in there. If it comes down there, that's 80 pip drop. That could be where definitely can be reducing risk. I'm going to reduce my risk. Okay, I'm going to a break even. Now there's no risk in my trade. Break even. Okay, I'm just playing with profit now. Okay, so I have no more. I don't need to get emotionally involved in having drawdown anymore. Nothing. My capital is protected. Yes, it realized a little tiny bit of drawdown when it came back up, but sellers were there, ready to break. Okay, so no risk. Personally, I have no risk in the trade. Whether you go to a break even or not, or reduce your risk, that's your business. Okay, so can we finish now, come down, grab that liquidity, test those lows down there? But remember, if it holds, right, buyers could be holding this move. So we're coming down. Come on, come on, come on, come to Puffa. Come to Puffa, get that money down there. We put this money, remember at the beginning of the call, we illustrated where the liquidity is. Now come and get it like a magnet. If we close below with black volume, the purple line could be resistance, right? It could come back up blue, blue, blue and get rejected to continue to push down. But that's a good move, guys. It took 70 pips to break and come down there and take that low of the day. So it could technically just reverse back up, grab that liquidity, like a wick, and come back in. If that happens, it sucks. It's demoralizing. I'm giving up a lot of my profit, but I don't want to go back into drawdown or it reverses bullish. Technically, I should have taken out 80% down there, but I was talking. Now the market is coming back down. So is it pushing down with that momentum to come down there? Am I being stubborn to grab this liquidity? Potentially. But come on, come on, come on. So you see that little flag that we had, that bearish flag in there? That kind of, you know, we saw it could have reversed, but our intentions were to come down with this leg. Just come on, finally tap into there. Get in there. Hit the likes on YouTube. Subscribe to the channel if you haven't already. If you enjoy what we do, we enjoy you guys as well. If you learned anything on that, you guys are with Sherry, take the money. Okay, I'll listen to you guys. I'm going to take out 80% down there. Okay, I got filled at 4,043 and 75 cents. So I got out 80% and I got now 20% with a break even. I'll listen to you guys on Zoom. It's all good. Money is in the pocket, so I'm a happy man. But I'm still invested, right? I do have a runner. Okay, so let me just move this money sign. And now we just got to continue to follow this volume, right? We got to follow the volume. 1 more minute to go. So I've closed out 80% and I just have 20% running on the break even, okay? Now, we're at a critical level, okay? That's where it created support right over there on Friday at noon, going into 1 p.m., right? And we're retracing right back down to it. This is the first candle today that could close below our lowest point of the day on short term, on 5 minutes, okay? So let's see if that happens, and we're going to continue to do our job. If we close below this green zone, remember that was an hourly zone. This might be the first black candle that closes below this green zone. We might turn this green zone into a red zone momentarily. Yes, it could come back and trade in there, but it could be red and then to continue to further push down. So this candle will tell us a lot of information on the close. And thank you guys for reminding me to close out 80% down there, because this is what could happen. It can get a wick and turn back up. Okay, so here's the close. It closed where? Right below the purple line, okay? And below the green zone. So the green zone technically on the hourly is red, right? So I make it red. So if it comes back in blue, 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 right? We could be trading now where hourly offers are now coming into this zone, okay? To continue to push this down, right? So let's see now. So did it close below the lowest point of the day? Yes. But now when it opened, it wasn't black, black, black to continue fill the wick. It's coming up blue, blue, blue. Okay. So yes, it could come back up. They could reject it back down. Just like it happened here where it came back up, they rejected it back down. Then it came down. Then this candle, it came back up, but look, it rejected back down. Then they really came back down with it. So same thing. There could be low of the day buyers buying right now. But if this zone establishes itself with the offers on the hourly, it could fill those buy orders and then continue to sell off as our daily candle could continue to turn bearish, okay? But this could be where I always say sometimes, guys, remember I had the arrow direction where I show it grabs the liquidity and can come back in and close above and then turn bullish, okay? This could be one example to show us this, but we got to let it play out, right? So that's why when I'm playing it out, I only have 20% with a break even, okay? So worst case scenario is I lose 20%. That's fine. I secured 80% down there, but this is for also learning purposes. When I have a runner, I'm continuing to learn. Will the red zone still hold up? Because I'm invested. I still have money in this, right? But you can continue to learn while you're invested in the trade. Right? I don't have to take my eyes off the chart now. I'm still learning to see if the red zone will continue to hold up, if there's still lower highs. Because if I do see this pattern in the future, I know what to expect or anticipate. Okay, so we see it come back up. It's a lower high, rejected. Sellers are still there, red zone. Now let's see if we can continue to push down that wick, close with some black volume here, and continue maybe to push down further. Then we can come down, revisit this red line, and then when we break the red line, just look what's below it, right there. Right there, I can draw another red line. Where? At those bodies, okay? I can bring it down to maybe those wicks right down in there, okay? So I know where my next supporting zone is established on the 5 minutes if we get down there. Mohaned, nice. You're done with 2.2%. Excellent. Mohaned, that's more than a daily goal. Fantastic. Please, Mohaned, just be done for the day. Or what I would do is if you want to continue to trade, secure 2% and then just trade with 0.2%, right? And if you lose that 0.2%, then you still walk away from the market with 2% in your pocket. If you want to continue to trade, that's what I do, Mohaned. If I go over my daily goal, percentage-wise, I just use a little bit that's left over. I trade that. If the market stops me out, I'm completely done for the day. But if you still have that urge to continue to trade, let's say you're doing really well today, you're 3 for 3, 4 for 4, I'm not going to take the bat out of your hand when you're doing really well, or I'm not going to take the ball out of your hand in basketball if you're on fire, right? So you can continue, but if you're happy, content, call it a day and just have some hobbies, like I say, and go on with your Monday morning. But that's excellent. To start the week at 2.2%, that's an unbelievable percentage. Okay, so this candle now is closing in 1 minute. Okay, we saw it come up, blue, 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 but the sellers are still there offering. Remember, I flipped the hourly zone to a red zone. Why? Because we did close below it, right? And now we have a bearish pin bar continuing to push down. We have a rather large wick to fill. We might not fill that whole wick entirely, but maybe we'll get some black volume, continue to close below the daily point, and then we could push down with the next candle. That's a fantastic shooting star candle we have now going into the close. 20 seconds to go. That's the candle we want. That was the beautiful retest we wanted. But let's see if we can continue to close down here, work our way down, and take out these lows. Then this trade could start to turn into 100 pips or more, okay? But it's not easy. It's not easy, right? Because there's going to be a lot of dip buyers that want to buy this liquidity that just broke the lowest point of the day, okay? So we did confirm that we did close with black volume below, right? But we didn't fill that wick. So now it's black. But if it does turn up blue, 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 again, we can use the purple line now as our resistance. We still have protection of the hourly red zone now, okay? So if we can just turn a black candle, fill those wicks, that's all we got to take out is that red line, and then we're traveling down to 4,038.37 area. And look at our daily candle. The daily candle has flipped now. Like, look at the daily candle. What if the daily candle turns into a shooting star right there? That's where the daily candle could push down even further, right? If we're looking at this as if this is a 5-minute candle, we want this to turn into a shooting star and continue to push down and get through all of these orders. These buy orders, we need the daily candle to flip bearish and push down, because then that will fill more orders down here. And then the further we get deeper down in here, the bigger our profit could be. Okay, so now you see it holding, okay? Those two last candles now have higher low support holding. See how it was blue, 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 coming right up to the purple line, rejected, and coming back down as a bearish pin bar, could turn into a shooting star and continue to fill. But you see how it came up blue, 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 and now we're getting rejected at the purple line, which was our low of the day, but we have volume closing below. So our purple line can turn into our resistance to continue to fill our wicks and push down. But right now it's just being momentarily saved from breaking down. But you guys see now how that green zone flipped red. We came in there, rejected. How the purple line was support, now resistance. Okay. Just briefly on a few candles. Okay. Will it hold up? I don't know, but bar by bar, so far we are. We're just failing to fill these bids down in here and drop down for a new lower low, okay? So this is where it could, create some support. Like down here, where it came down, it went back up. Then as it came back down, then that's where it came back up. So similar here, as we came down, we took out those lows, it could build to come back up. And then it could get pushed down again. That's why we got to watch for a double bottom. So if a double bottom comes in, then we could be coming right back up to here to the opening balance. And the market could also consolidate here, okay? It could flag, just like here, where we established a flag. When I told you guys there was a flag right here, right? We could establish a flag right here now, where the market is just trading sideways right here. And if it's a bear flag, just like this, has a high probability of continuing to push down. Okay, so I'll make it kind of neutralized. And we're moving into 9 a.m. also in the next 6 minutes. So we're going to get a hourly move. So this is sometimes where the markets, change momentum on the hourly, right? We were coming down nicely, but come 9 a.m. now, could be an opportunity for hourly dip buyers to buy this discounted move. But it could be just a pullback, and then hourly sellers are here to sell it back down. Then we push for a new low. Okay, so it's going to get a little consolidated here and a little fight between buyers and sellers going into the new hour in the next 5-6 minutes. Okay, so now we see the buyers are here. So we have a higher low established, blue volume coming back up, right? Trading in this red zone just above the purple line. Again, we got to wait for the close. Here's the close in 10 seconds. So it closed right above the purple line. So the purple line now momentarily turns into support. So will it hold blue? Yes. And can the blue continue to fill those wicks and get up back up to that opening balance of that black candle? Okay. Remember, this was more of the tweezer bottom low, that wick and that wick with that body closing below. This red line is more resistance here than just these. Okay. So if it comes up blue, 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 I would still identify this red line as the major resistance on the 5 minutes, not just this area. But if we can hold it down from coming all the way up there, then the sellers could technically push it back down, okay? And that's where the 9 EMA is coming down to that red line right there. Okay, so when I'm looking at an indicator now, it's complementing that red line. Okay, so it could come up blue, 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 and then that's where the resistance could be to continue to push it down. If it comes up there, I'm still in profit, right? My break even is all the way up there. And I'll get to US30 top down. We'll do that at 5 after 9. And then we'll also get US30 ready for Wall Street. And then we'll move off of gold, okay? Okay, so what we can see so far, it came down, it grabbed that liquidity. Now it's coming back up. So going into the 1 hour, this is what I was alluding to. This is where momentum can switch, okay? So it came down, grabbed that liquidity. Now it's coming back up right there exactly to that red line. That's what I was just saying. It could be resistance, okay? So it did get rejected, but there is blue volume still left in this candle. So it could come up, right? It could go back down. If it comes back down, this is where it could be a double bottom. And then it pushes back up through there, right? And then if it flips, okay, I get out at the break even, my 20% remaining, but it could flip. And then where it closed back above the opening balance, then 9 a.m. and Wall Street, gold flips back up bullish and reverses, okay? But so far, see that red line, what I mean? That wick and that wick were the support. When it closed below black, it now made it resistance. So we see 3 times it came in there, pushed back down, came back in, pushed back down. But this candle is still building. It's still fueling itself with blue volume. So every time it comes back up, it looks to break it. However, it hasn't done it yet, okay? And we're figuring out where the true neckline is or the true resistance. And that is exactly 50% of the hourly zone, this entire red zone. Right there is the midpoint. That's why, guys, when you're breaking a low of the day or you're breaking a high of the day, it could come down to grab that liquidity and it could reverse. Okay, remember those 3 scenarios I showed you? That's why it was a good idea to take some profit out when we broke. Because yes, markets do reverse. After they grab that liquidity, they can reverse. And same situation. If the blue candle closes above the red line, it can make the red line support, and then it could come back up, okay? It could come back down, but when it comes back down, this is where you could be building a double bottom. So that's where there was a lot of support back there on Friday at noon. Right over there that it didn't break, and it still held up this morning, okay? And then now it's reversing back up, okay? So did it break that red line? Yes, impulsively. Still got rejected back down. Remember, we got to go into the close of the candle. So sellers are still here, but there's a lot of buying volume on this candle, and we're going into 9 a.m. So watch now. The new candle that begins, the new hour, is going to be a pretty explosive candle volume-wise. Look how it's building and still holding. So it looks technically like it wants to open at 9 p.m. bullish and continue to go through here. And that's going to be where my break even is, right there, okay? And I have no risk involved. I reduced my, if you guys remember, when it was going down in profit, I took my stop loss from where I placed it above that candle. I brought it down to the break even. When it dropped to 70 pips, I got my 80% out, and then I'm just fooling around with right there. I got hit at break even with the 20% running. See what I mean? How the candles get volatile now at 9 a.m. New hourly candle, okay? So that's why, guys, it's good that we took some money out. Yes, did we want more? Absolutely. Everyone wants more and more and more. But if we had not taken out 80% down there, then the entire trade either went to break even, but some traders don't even use a break even. Remember, your stop loss is still up here or higher, okay? Now, this is volatility of the new hourly candle. So it came right through there. There's a big rejection, right? I got stopped out at my break even. However, if I'm following this volume, I see a big rejection. If it closes back, it could be the next move to come down. It's just gold is getting, this is the way it trades, okay? It's still technically trading around here. That was a nasty candle that came up blue, unfortunately took me out. And then now I'm watching it. It's a shooting star candle coming down. So what they did was they came up there and they hunted for stop losses or break evens in myself. Took us out of the market, grabbed, right? When I got, it's just hit there at break even, it's liquidity. It canceled out my trade. So they came through there. They canceled out a lot of trades. And then let's see if they're going to move back down with it. If they move back down, we got to see black volume again, close below that purple line to continue to push down bearish, which could technically happen. Okay. We're still trading in this red zone, right? That was an impulse move. The blue candle has not closed above there for me to change the red zone to green, and it could technically come right through there. So if you guys are still in and you're still in your sell and you never got stopped out there, this could be the candle that breaks down the market right here. But look at the volatility. Look at the range of this candle, okay? See what I mean? When an hourly opens, it's much different than any 5-minute candle. Like, look, that candle right now has a range of 100 pips, and it's still going, right? We're still got 2.5 minutes to go. This could turn into like a 150, 200 pip candle, okay? So does it hurt my stomach seeing this? Yes. Do I think it's going to take out that low? Yes. And continue going down further? Yeah. With this 9 a.m. volume, but but you see how nasty that was? It cleared all of the orders up there, right? A lot of these sellers, maybe potentially like myself, break even, stop losses. It hunted them, and now it's time to move back down. Ben's the usual liquidity grab on gold. Yeah, it's nasty, but just learn from it. Look at when it came in right at 9 p.m. So we did create a new lower low, follow the volume into the close, 90 seconds. Can it continue to close below that purple line and push down further? Okay, remember there's buyers that want to buy this back up. Okay, so this is where it could be that tug of war, right? But if you're buying against the trend now. You're buying against the daily bearish candle. You're buying against the hourly zone is sellers. You're buying against this 5 minutes, right? If I was looking to buy, I would wait for maybe blue volume to close above, back above that yellow line to flip the hourly zone and recover back above the opening price of the daily candle, if that makes any sense to anybody. Because if you're buying down here, yeah, you're buying a dip, but you could just buy back right into some offers and then they push you right back down. So you're buying against the trend. The trend is selling right now. It's like clockwork. 9 a.m. came in, they took out all those orders and reversing the market down. And notice where it is. It all happened below 50% of that black candle right there. That held at 815 right there when COMEX market opened wick, the next wick, and right there, that's similar, that red line right there, that cut line. Okay, so there's the close. Even if you're to come down to 50% of that black candle, it's right at that daily purple line, right? So even if it comes up blue, 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 it could get rejected and continue pushing down, okay? And then if it breaks and comes down lower, okay, you're filling now from this 5-minute zone to that next 5-minute zone. And then if you come down further, you got that daily yellow line. What is that daily yellow line at 4,027? Because we never wrote it down. If you go to your daily analysis, okay, look at the daily candle now. Excuse me. It's flipped like a pin bar, maybe shooting star. So what I have, that daily yellow line there at 4,027 is the body close on Tuesday of last week and the body open of Wednesday and the retest on Thursday, and then Friday made a new low. Okay, so if we come back down today, we're filling Friday's wick, but then we're going to make a pause right there because there's a wick on Thursday and a body open and close on Tuesday, Thursday of last week. So it's basically where our weekly support is. If we can come all the way back down there, 4,027. Okay, and when we look at it on the 5 minutes, it's that yellow line right there. Okay, guys, I'm gonna go off of gold now. What we're gonna do is an analysis on US30 because we're gonna get ready for Wall Street and US30 that's opening up in the next 20 to 25 minutes. If you're in gold or watching gold, again, just keep an eye on these levels. It came up blue, 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 right to the purple line. And now the 9 EMA is coming down there and rejected. So if they flip this, it's a short wick. We could definitely fill back down to this red line, which is 4,037. And then ultimately your next daily point of interest is right there at 4,027. Christoph, 4,027 could be an entry for a buy. Absolutely. It could be a reversal of a buy at that daily point of interest. That's the all-time high trend line. Remember that orange line? So yes, if it does come down there, you could potentially entertain a buy to bring it back up. What I would do is place an alert, Christoph, at that yellow line, like me, adding an alert. And when it gets down there, I'll watch, right? I'll see if it comes down. Will it be a V-shaped recovery off of there? Will it come back down? Will it be higher low like a double bottom? Then good buying opportunity. Will they spike that level, grab liquidity below it, or like something like this, break it, grab that liquidity, come back up, close above, retest, then potential buy opportunity. But that's what I would be looking for. It's much better, higher probable area to buy there than just to buy right here, right? Because they could naturally break this, continue to come down to that daily level. But it might hold here and continue to build. Another buy opportunity, what I would be looking for, Christoph, if it doesn't come down here and it builds here, is if it comes through here and closes just like that, it came up, but if it closes above and retest the opening balance, then it could turn back up bullish to there. So I would be, if I'm looking for buys, I would look for a buy above that yellow line if it builds its way back up and closes above and retest it, or down here. I wouldn't necessarily just want to buy anywhere inside here because it could push down like a magnet to that level. because there could be big money waiting down there. That's the way how I would go about it. Otherwise, I would just maybe continue selling down with this momentum to get it down there, right? And when it gets down there, if I'm in a sell, I got to acknowledge that that could be where buyers are. So it would be a good opportunity to close out your sell, realize some profit, because that's where buyers could be entertaining to bring it back up. Okay. But guys, continue to watch gold. It's a Monday morning, right? So it's not trading. It's not like basically trending so far, but it could start moving at 9:30 as well when the US market opens up as well. Okay. So what I'm going to do now is, wow, US30 is right at the all-time high. Holy. Okay, so we're not too far away from the all-time high on US30. So let's do a nice top-down analysis, figure out what's going on US30, and get ready for market open. Okay, so this is US30 on the daily. Okay, just looking at some obvious pivots. Right there was the previous all-time high. Okay, and then you see those 3 wicks, right? There's 3 rejections right there. There's a zone, right? If I stretch it into the future, we're still holding this green zone. Are we back at this yellow line or at this zone? No. So I can place an alert there and keep it there until we return back down into here. We might not, but whenever we do, I have an alert. Okay. Now, just obvious points. Top-down analysis, starting from up here. Okay. Let's figure out our highest point. That is basically the all-time high right there. When did we hit it? July 7th. Okay. And look at where we're tracing right back up there. We're 20 minutes away from Wall Street market open, and we're a couple points right from filling the new all-time high. Now, if we break for a new all-time high, I have no analysis because this is called price discovery. It's never traded up here in the lifetime, right? Above this wick. So then you just got to go with whole psychological numbers. If the all-time high is 53,362, okay, the next 100-point increment would be 400, right? But 400 is very, very close to, like, look, if I place a yellow line, it's right there. So maybe from 400 go up to 500, okay? 53,500. That's a nice whole psychological number, okay? Then again, 600, 700, maybe 750, 800, 900, and then 54,000, right? So those are the numbers that kind of, depending on how you trade, if you scalp, you want to be on the 25-point increments. Like if it goes to 500, 525, 550, 575, 600. If you're more of a swing trader or a daily trader, go in the bigger increments. Go 500, 54,000, 54,250, 54,500, 54,750. Like it's an auction, right? Okay. We'll entertain when we get up there. We can analyze up there when it gets up there. If it does, right? It might not. Okay. So from the all-time high, it came down. There was the close, right? Right there was the close. Yellow line. We've got volume today above it. Okay. We could be creating that resistance point. Now could be support, right? Remember what the goal of the candle is to backfill the wick and create a new high. Okay. So that's where we're at right now. If I draw this as how I normally do, from the wick to those bodies as a red zone, this is what I normally do. And when I stretch it into the future, if I do, I can see today we're trading right into it, okay? So you can see we're coming into that double top of that all-time high zone. It could get rejected. We could squeeze and break through here, okay? So that is still technically a red zone from that all-time high. Trading into today, it's came back down and came in there. So do we have a pivot point of good solid support? Yes, right there. 51,575, solid support. Is there, look below it, a wick, 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 and there's the bodies. So I know how big to draw a zone below that yellow line just by looking at those bodies right there. That's good enough for a zone. So I can see we're well above this zone and there's good daily support at that pivot now, okay? So now let's follow this volume. Big bearish candle Wednesday, July 29. Then we came up very bullish Thursday, July 30th. Again, bullish on Friday to end the month. And look at our new month or where we started today. Bullish ignited, okay? So let's follow. There's our opening price. It is opening price, but it is also our low of the day. It's a bullish ignited candle. Just like if this was a 5-minute strong candle, it's a strong daily candle. So it is technically our lowest point day and our opening balance. So it is purple. So I will write on here that it is our low of the day slash opening price. Okay. And it's opening, and I'm going to put in brackets here, bullish ignited. Okay. So everybody understands that. So this opening is representing the low and the open. Okay. And let's follow the volume. So are the buyers doing their job? Are they filling Friday's wick? Yes. Friday's wick was the resistance. Draw a yellow line. 52,650. Are they continuing to be strong? Yes. Did they get up to these bodies? Yes. Okay, so those bodies were a resistance point, and now we are above it. 52,760. Are they continuing? Look at, they're backfilling this wick, this wick, this wick, this wick, this wick. I would get up to those bodies, right? Right there's another interesting point. 52,900. That's what started that big bearish day on Wednesday, July 8th that took it to the downtrend. Okay, so we are filling. We have a high of the day established so far, right? And we're 15 minutes away from Wall Street market open. So that's our highest point of the day, 52,220. I can see the high, all-time high is 360. That's 142 points away from filling the all-time high wick. It could grab, remember what's above here, liquidity. Just like I showed you the liquidity on the gold sell. There is liquidity above here, right? Does the market want it today or not? Okay, that's what we will determine. Will it come in there? Okay. And now if it gets rejected and we push back down, first line of support will be this yellow line, which was these previous bodies, okay? It's shallow, but if it goes down further, deeper, what about right here? 52,907, because it was a body of right there, support, resistance. It came back up, blue, rejected. Blue, rejected. Blue, rejected. Blue broke for that higher high, then got rejected, and then came back up and got rejected. So this yellow line area has a lot of resistance, which could be support today, okay? So that could be a good buying opportunity on a pullback at Wall Street, like right around here. I'm going to draw it as a little green box right there. For a pullback, if it comes back down, that's where it could be a good opportunity to buy, to continue to fill today's wick and drive, okay? If we lose this, then we could start to trail back down to this yellow line, to that yellow line, ultimately to the open. We lose that, then we start selling, sell down to where? Either, depending on what type of trader you are, 50% of that blue body. However, if you want the point of interest, it's the open of the candle, okay? And I can continue to go down. If it continues to sell down, that wick, right? And into the green zone. Okay, so it's very bullish today. That's undisputable. Okay, now let's break down this daily candle in the hourly and figure out where did all of this bullish volume come from, at what time. Okay, so we can see how it was trading on Wednesday of last week. We can see it turned back up on Thursday, thin volume on Friday. We pushed down Friday, 7 a.m., 8 a.m. There's Wall Street, 9 a.m. It came down 10 a.m. Then we reversed back up Friday afternoon, going into the close, and look at where it started. Bullish ignited, the opening balance. There's 6 p.m. Sunday. Strong candle, closed above structure, right? That was a point of control candle. You should cut that candle, hourly candle, at half and find the point of control. We are nowhere near that right now. So let's continue to follow this volume. It came in. When did it pull back? 1 a.m., 2 a.m., 3 a.m. London. Bullish candle. 4 a.m. There's a Tetris piece inside bar, 5 a.m. And then 6 a.m. closed strong. It's basically exploded during pre-New York, 6 a.m., 7 a.m., and 8 a.m. Okay, very strong. Remember when I said it's a good buying opportunity there at that daily level? Okay, so that's where I have an alert, placing it. Now hourly, okay? Can we figure out where there's, when this last 8 a.m. candle opened, right there, white line? That's where there's hourly support at just above 53,060. Okay, so if we come all the way back down, right, we should find some day support at the yield line. If we can't, maybe at the hourly, okay? If it dips down further, 50%, ultimately this green zone would be the ultimate buying zone on the hourly and the daily, okay? So that's an optimal zone. But if we want to see pullbacks, maybe coming down to the yield line, reversing back up, or coming down to here. So far now, like if we look on the RSI, hourly is completely overbought. That's not a surprise on these 3 hourly candles, okay? We're trading at the highest point of the day, 10 minutes before Wall Street, and this is how far we are off of the all-time high. So if it gets a little bit of selling pressure, let's say all of these buyers are in profit and they want to look for exit liquidity at Wall Street market open, maybe they sell, and then we get a little bit of a pullback. Then new buyers enter and buy it back up. Then we got to see if we can break this, maybe attempt to come up a little higher, maybe to the all-time high, or it's a double top, and then they start dropping it down into here, okay? So far, we have this thin hourly candle. It just opened 20 minutes ago. There's still 40 minutes to go into the close, but this hour is representing Wall Street market open as well, okay? So if I go on the 5 minutes, 5 minutes obviously is in a nice bullish trend. Think about if you were selling, okay? If you sold, that's all you had. 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 And in that consolidation, if you sold, you basically had just a tiny bit, right? So the trend is obviously bullish. Like I don't even need to draw a trend line. You can see how bullish it is, okay? It's like a bump and run where it's just moving, bumping and running, bumping and running. Okay, are we anywhere near this 5-minute trend line? No. Okay, was there a flag of consolidation? Yes, you can see right there. There was a flag, right? So if we move that flag into the future, again, look at where it is, right at that hourly support level. So if it comes down to this white line, during Wall Street, that might be a potential buy opportunity, where if we see it sell back down, that's where we could maybe potentially look to buy to bring it back up. If we lose this zone, we break the 5-minute trend, we lose our hourly support, closes below, that becomes a red zone, then it could sell down to there. And that's the optimal buying area because we're at a daily level, okay? This is just hourly. Remember, daily is stronger than hourly. Okay. So now what's going on just right before Wall Street? We've got a little bit of a top up here, okay? So it came up, back down. Came up, did it fill? No, back down, drop, came up, drop. My 5-minute lowest point of interest going into Wall Street is right there. And this is where it could consolidate. Now let's look at the pattern we recognize. Okay, this is a pattern we all recognize. It came up, back down, coming back up. Will it break, squeeze, or will it come, double top, M, drop down to there, okay? But there's going to be extreme volatility when 9:30 opens. Why? Because the Wall Street is opening up after a weekend. There's going to be a lot of orders situated, and this is how close we are to the all-time high, right there, that orange line. Okay, so again, do you want to buy now going right into Wall Street in 7 minutes? Do you want to sell now? Or should we wait for minimum first 5 minutes of Wall Street market to open to see what happens, right? That's, in my opinion, the best thing to do is wait. Because if we buy right now, look at where we're buying. We're buying the absolute highest point of the day so far and the absolute highest point of this trend, right? Even if we look at RSI, it's been overbought for some time. So we're buying in an overbought condition where Wall Street, all of these buyers could be waiting for the market to open and look for exit liquidity. And if we buy, they could be selling the market down and then we're stuck holding the bag while it's coming all the way down to here. So as a buyer, I would potentially want to wait for a buy down here or down here. Let the market sell down. If it doesn't come down here, then I watch and see, will it pull back a little bit? Will it go back up, maybe close above? Will you pull back here into support? Then I might buy that to take it back up. But ultimately, I don't want to be exit liquidity, buying the highest point and then it sells down, where I could wait patiently for it down here and buy a dip buy, right? That's just common sense, using logic. And another thing is maybe we sell up here right now, okay? But the thing, if you sell right now before market opens, it might have one of those bullish candles that just squeezes through here, then gets rejected down with a wick, okay? So I would just exercise caution or be careful or just have rules. Like some traders have rules and they say, I don't buy or sell anything 5-10 minutes prior to a session. And regardless of what I showed you, whatever the setup is, you know, that setup can be negated as soon as Wall Street market opens. So having rules, I stick by rules. Rules will get me farther in trading than just guessing that today is going to be the day I'm going to take a buy at the highest point and hope for the best. Because, you know, you should at least have some rules or discipline when you're trading, right? We had rules with gold, right? We waited. Look at gold. Shit. Oh, man. Okay, I always have to ask this, but is anyone still in on the gold sell? That nasty 9 a.m. candle, look at what it did. That was the candle that spoiled the party right there. But look at it continuing to push down. Look at everything, guys. It's using the purple line, came back down. There's a Tetris piece. Inside bar. Next thing, 910 closed below, right? Came back up and continued pushing down. So look at it. It might fall all the way down to that yellow 4,027. Captain, you still have a runner left. Nice. Kelly, you do too. Mike, you exited at 37. Nice. That's good profit down there. Shit. But that look at that 9 a.m. candle. That first 5 minutes is spoiled the party. That took me out on my break even. Man. But the overall trend, if you were watching it, you see it's still bearish, right? Wow. Okay. So gold is, look at the daily candle now. It's really flipped into a shooting star. So they're bypassing all of these buy orders. They're filling them with all of these daily offers. Okay. So the higher time frame is winning right now. That's a beautiful sell on gold. Shit. That looks really nice. Look at the candles. Lower lows, lower highs. Lower low, lower high. Lower low, lower high, lower low. And it might conveniently come right back down. And look at now. Who was I talking to down here? Was it? Shit. Let me just scroll back up. Christoph, you were looking for the buy down there. Okay, so we're approaching the daily zone, and look at the 5 minutes. They're starting to get oversold, right? RSI is below 30. Okay, so that would be a potential area to buy a dip, right? These sellers now need to find buyers to realize profit. The buyers could be waiting down here where this liquidity is, right? And then now we can watch US30 going into Wall Street. Again, we can add our indicators. 9 EMA, we're right at just below the 9 EMA. We haven't been below the 9 EMA or closed below in a long time. Okay, you can see a lot of impulse breaks of it, but no bodies closed below. This might be our first black candle that does close below a couple minutes right before Wall Street. Our 200 EMA is the purple line. It's all the way down here. Okay, so the purple line can be starting to come up, maybe meet at our daily potential buying zone. This is that hourly zone where we can entertain, but this is a stronger buying area, obviously, because it's a daily. And then a 200 EMA could be coming in there. Okay, and then finally, the daily bar indicator on the daily to give us our overall trend was extremely bullish today. There was the opening and the lowest point of the day. It's a bullish ignited candle, and it just as you can see it right there. It was the first 5 minutes of the daily candle open, okay? And since then, it's just been making highs and small pullbacks. If you were selling today, US30, you can see that there's small sells, or you're counter trading. You got to have counter trading rules. Because it's just buying, small counter sell, buying, small counter sell, buying, small counter sell, buying, consolidating, not breaking down, buying. This could be a small counter sell too, and then come Wall Street, continue to break out of here and go back up, okay? So we have about 2 more minutes to go into Wall Street. We're going to watch US30 today. You can also be trading NASDAQ. You can be trading S&P 500, whichever you like, okay? And if you're still watching gold, pay attention to gold as well. especially at that yellow level, around 4,027, 4,025. Okay. Now we got some selling pressure right before Wall Street. Okay. So let's follow the volume, right? Is this candle going to close all the way below that daily yellow line? This is a significant candle. Look at the cut point, right? Could be that wick, right? That wick of 915. If it closes like this, that could be the exact cut point, right? Sometimes you don't even have to cut the candles. The candles will naturally cut themselves, right? If you just pinpoint good interest points. Okay, so again, if you're going to trade US30, check your spreads, check everything. Check your lot sizing. If you are trading gold and you now move to an index, you got to change the lot size potentially with your broker. Different contract sizing. Okay, look at this candle. Bearish right off the open. Very strong selling pressure. Wow, okay. So if those buyers who bought up there didn't get out, maybe they need to join SST and listen to what we're saying here. Holy, okay. Look at this massive structural candle. Wow, okay. So hopefully those buyers secured the bag. Wow, wow, wow. Okay, so that is the structural candle. It closed below. Real quickly, I'm going to have a lot of lines on my chart here, but that's follow the opening price, closing price of that candle. Come down to 50% is right there at the bottom of my red zone. If I'm just capturing the point of control of that candle, 382,618, it's right here. We're trading right into it as I'm speaking. Do you guys see how that massive candle came down, closed below that hourly zone? This is the dip buy coming back in, but now we got to see, is that a true selling candle? Because then it should have a point of control right here, but the buyers are bringing it right back up. So they're buying it right away, okay? The first 1 minute, essentially. Now we start to see where the bigger zones are, okay? See how everything looks now? Here it came up. Daily high, it just came back down to the hourly zone. Just grabbed all those buyers within 1 minute, okay? If you bought, fantastic. If you got filled, great. But what we got to see is the bigger picture. Is it going to come back up to break for a new daily high? Is it going to be like a double top up there and come back down? And then look at the big M pattern to break today to sell or to continue to hold, right? You don't need to necessarily just trade right now, right? We can wait to see what's going on. Okay, so right away, the point of control of that candle did not help. This is Wall Street volume, okay? So it's much larger volume than any other time of the day, okay? But we can continue to watch this candle, how it closes. So that was bullish, 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 came up there. They're rejecting it back down. Where will it close? We'll figure out in 3 minutes. That's what I mean. If you're not ready to trade the opening, it could get very volatile. And then look at how it just sold right off just right before market opens. Okay. Gold still working its way down, potentially right down in there. Look how gold is behaving today. Trading real nice, and US30 is the out of control one right here. US30 is holy, look at this thing. News, guys, don't forget this morning, 10 a.m., there's ISM manufacturing. Okay, it's a high impact folder at 10 a.m. will be coming out. It will affect everything. Okay, so it comes out with this above 50, it's like a psychological number, indicates industry expansion, below indicates contraction. If you can see, the forecast is set at 54, we'll see the number, okay, when it comes out. That will affect the US dollar, in turn affect the stock market and gold as well, okay? Wow, look at this bullish candle coming all the way back up. So It is just another candle. It's got a job to do. Will it continue to backfill those wicks? So far, it's a lower high, right? We have one more minute to go. And gold could be coming all the way right back down to this potential buying zone. Okay, look over here, Christoph. If we go backwards, okay, you can see kind of the lowest point right there. See that wick right there? That was that final liquidity grab before gold reversed back up at 4,021. So there's a good little zone where it came in, back down. That wick is the absolute bottom right there. Then it moved back up. So we could be coming down here. This is where it could be a massive double bottom, right? Where it comes down. That's one big bottom right here. What's going on here? There's one bottom. Okay, all of that moved back up. Now you see how it could come back down and double bottom in there, right? That's where it could come back up. But as we come back up, if you look for that buys, you're coming to that red line as resistance at 0.37. That's resistance at 0.42. Then you're right back to the daily lowest point, which could be, it could come in as a buy there and then get rejected back down, right? So you got to know what you're going up against. But this looks like a good area to potentially look for buys. But as we're buying, we're still counter trading all of those resistance points, okay? So again, just cut that black candle in half and see if we're still pushing down, okay? US30, okay, so US30, blue, did not fill those wicks, got rejected, closed in that red zone, the point of control of that big black candle, right? So now it's opening blue ignited. So blue ignited candle technically should be bullish, but that's a big wick to fill, okay? So if it gets rejected back down, then the sellers are still there from that big black candle, okay? They're trying to hold down these buyers. And if it starts to break down, it could continue to start selling off, okay? So I'm still waiting on US30. We've got gold that now just came right into here, okay? So should we just buy blindly? You can. Like if you have a pending order, maybe it got activated. If you're watching the candles, then you can literally watch and see what's happening. There's 4 more minutes to go on this, okay? So is it at a good area to buy? Yes. Is it on a pullback to buy? Yes. Are you buying a discounted? Yes. Are you buying a security that's oversold? Yes. On the 5 minutes, are you buying at a daily point of interest? Yes, yes, and yes. However, it's still black and could go down further, right? So look at the size of the daily candle. It's massive, okay? So it's still pushing down. Now we got to watch for that liquidity grab, what I was saying. And that's that extreme lowest point, that red line, 4,020. All the way back, we can pinpoint it exactly from Friday, July 31st at 10:05. Almost exactly the entire retracement from Friday at 10 a.m. Maybe we have to wait for that ISM manufacturing news. Could be the reverse of the market. So what would cause gold to be bullish with ISM manufacturing news? Right? Shitty numbers. Below 50 is contraction, or if it misses, what does it say? 54. Okay, what if this comes in 53.5, 53, 52.5, 52? Anything lower than 54 is it's lower than the forecast, but if it's still above 50, it's still considered to be good. However, if this is a really shitty number, like 50 or below, it's lower than their forecast and it's contracting. That would be really bad for the US dollar, and that would be really good for gold. And look at where gold is retracing down to a potential area of buying. So that's how you put the price action and the news together, put the pieces of the puzzle together. Okay, so it's still bearish. Sorry guys, I'm on gold, but just breaking it down. US30 is continuing to come back up, so we got to watch again. If you're blue, it's got a job to do. It's got to fill those wicks, right? So I'm just continuing to watch. Will it be a double top, liquidity grab, drop back down? Okay, I'm more interested. I want to watch gold, guys. Gold is really interesting right now. Okay, so we took out that low. Okay, so we have a new low printing. What's below this red line? Okay, just go backwards. The price action will tell you exactly. Okay, now we're trading back of Wednesday's volume. Where do we have a pivot on Wednesday? Right here. Right there, where it dropped. This was Wednesday. When? Comex, 820, and there's 825, 830. And there's where it pushed down. So 4,013. Okay, coming back to the chart. Okay, did they grab some liquidity? Is there a wick there? Yes. Okay, so now it's coming right back up with 1 minute to go. So it came down there, new low, coming right back in the green zone. We'll look at the rejection. Okay, let's see. Let's follow this thing. Maybe we could entertain maybe a potential buy opportunity. However, it could drop and close below and continue pushing down. Okay. It's closing in 40 seconds. Watch the momentum go into the close of this candle. US30. Watch US30 as well. Will it fill those wicks and create a new high? Will it close above here? Okay, so we're closing now in 10 seconds on gold and US30 here. Here's the close. Okay, so we closed in the green zone. It opened black for a second. So it's black ignited. It could technically come back down, right? But if we pick up a higher low where it doesn't fill that wick, it's a rather long wick to fill, okay? So it takes a lot of sellers to fill that wick. It could do it with this candle because it is bearish ignited, okay? But let's see if we can create a higher low in this green zone and flip that candle back up blue and then maybe start to retrace blue, maybe look for a potential buy, okay? It's blue, I'm gonna buy. Okay, it bounced. Okay, so I'm gonna just look. It's a counter buy, but it's at that location where I got an alert waiting for it. Okay, so first thing I'm looking is where am I placing stop loss? I'm in a buy. Okay, my stop loss, I'm gonna place it below that wick that got rejected, that kind of liquidity. What am I looking for on the buy? To come back up to that red line, maybe to the next red line, to the next red line, right? Those are different targets, what I'm looking for, okay? Now I got to measure the move. I'm in a buy right now. If it fills up to the first red line, it's 40 pips, right? If it can get up to that second red line, it turns into 80, 90 pips, okay? So I'm in a buy, and it's the first bounce technically, okay? So I need to see like a V recovery here because I know it could come back down for a double bottom, right? But my stop loss, maximum stop is below that wick of the previous candle. Okay, that's my protection. Could I put it lower? Yes, but that's good enough. Okay, so what I'm looking for is a nice little V recovery, maybe a bullish candle to create a high, what it's doing right now. Okay, if you just want to scalp in and out for 20 to 30 pips, that's exactly what you're looking for as a scalper. That's perfect. Remember the red line measured was 40 pips up there. It is a bullish engulfed candle, but still with 3 minutes to go on the close, okay? So it's a lot of time to go, but you see how you can just scalp a nice alert off of this zone for 30, 40, maybe potential 50 pips. You can go to a break even if you like, you can scale out if you like. However, if we're looking for the next move, we're looking to travel back up to that next red line. Remember, all these red lines were established from before, right? We're just looking to fill some volume in, okay? I'm gonna go now, reduce my stop loss to the bottom of the candle that just opened, right? I'm going to go to a break even now. Okay, it's a good Monday. It's 50 pips, right? I'm at a break even now. It's 50 pips, right? Break even time. Why not? Why not go to a break even when you're up 50 pips on a counter trade? Let's reduce all risk, guys. Let's learn. The most important thing is learning why did we look for buying at this yellow line? That's the most important thing. So I'm also teaching here butt trading with you guys. So I have no risk again. In profit. Now, what do I want to look for? Do I want to look for to come back up to here? Maybe that could be the neckline right by the 9 EMA. I might need another bar to get me up there. However, I can work with this bar if it closes. I measure 50%. It could be an ignited bar, short wick, continue to fill, right? I know I'm counter trading, so I can't get too greedy because it could come all the way right back down. And then worst case scenarios, it's a break even, okay? But if we want more pips, we got to go with the volume, right? We have 90 seconds to go until the close. You guys follow me? Christoph, this was basically for you to understand a liquidity grab, came back up, closed inside there. We waited for it. And as soon as it broke, I was a little late on the buy. I should have got a little earlier in the buy. Like right when the body turned, should have got right in because I saw the liquidity and it held the green zone. So that I got in a little late myself. Okay. And that was my fault. So we're moving back up now. If we can remember what we're looking to do, fill to the body of those wicks, 60 pips, fill that wick, 70 pips, get up to ultimately the red line is 90 pips, right? Okay, let's see. Maybe we close near the high, we get a bullish ignited candle with a short wick, and we pop on our next candle. Everyone on YouTube, sorry guys, I can't read your comments or anything like that, but also you guys are here learning as well. I'm more focused when I'm not reading the chat, guys. That's what I told you guys on Friday. Because sometimes the YouTube gets a little carried away with the chat, and we're not even talking about trading anymore. We're just talking about silly things. Here, we're focused. So I hope I explained that properly, but we're still counter trading, okay? We can't expect a move to just come bullish unless there's news all the way up there, right? We got to understand we're still trading into all of this selling pressure, right? So it is a counter trade. It's a counter scalp. Look how we just opened, okay? Bullish ignited, right? It's got a job to do to continue to fill the wick. We're bullish ignited, okay? If I drop the red line down to 50% of the candle, it's just right above where I bought in, okay? But remember, I'm on a break even. So it's a bullish ignited candle. Can we continue to fill our wick, which we just did, and maybe fill to these prior wicks on this bullish ignited candle? This is the candle to do it because we're counter trading. So we need to carry this momentum forward. If we don't, if the sellers push it back down, we lose this open, and then it could come all the way back down to 50% and then potentially take me out at break even. So we got that bullish ignited open. We're pushing right to that 90 EMA indicator, but filling the wicks more importantly, watching price action. Okay. So if it gets up a little higher, right? Don't be scared to take some profit out if you like. Remember that's 70 pips right there. Okay. And then you can leave again 20% running if you like we did with the first trade of gold. Okay, because a lot of traders use the EMA as a resistance, as a support. So it came right into it and rejected back down. Kira, how about NASDAQ? I didn't even analyze NASDAQ. I'm sorry. Oh, wow, guys. Look at what US30 is doing, okay? That's a nice double top. Look at it. Beautiful. Look at this thing, okay? It came up, back down. There's the neckline. It came back up that bullish candle that didn't break right there. Didn't break. And look at it coming right back down. So if it closes below here, we could still see selling pressure of US30 getting down to there. Okay. Guys, we have a big rejection on gold. Yep, I'm about to get stopped out here at break even, but let's see. I'll verbally let you guys know as soon as I get stopped out. I'm still in it, still holding, barely holding by a wick down there. There is a wick. Okay, at that 50%. Can it reverse here at 4,030? Build some support. Again, then I have to ask myself at 70 pips on a counter trade, why did I not close out 80%? You know, so that was, again, a situation to learn. I still am holding on to it. They still haven't got me, but they are coming down, and there they got me. So I just got taken out at break even, okay? And if I had to critique my trade here, yes, I know I was counter trading, but my entry was okay. But when it came up there, I didn't close out 80% on my 70 pips. That's a rule I have, and I didn't follow my rule. So then the market came back down. So hit my break even. If I didn't have a break even, remember, it could come back down bearish, engulf, and then come for stop loss. So I don't want to give any profit back to the market today. Look at that. So it sucks when you see that. You get hit break even and it could move back up. It happens. It's disgusting when it happens, but it is what it is. And then the candle could turn back up bullish after they tag out. Am I going to a break even rather quickly? Yes, because I do know that a lot of you guys do over leverage. Okay. So my mind is on you guys a lot. So when I go to a break even, I'm at peace. I have peace of mind knowing that I'm at a break even. And if you're not following me, then you're on your own, okay? Because I know that traders do over leverage and gamble, and I don't want to be responsible for that. I like to sleep good at night, okay? I don't want to be blamed for anything. I know you should be following your own rules when you're trading, and you shouldn't just go YouTube hopping on channel to channel and just look for signals or just buying off of people. You should be actually learning what we're doing here, okay? I'm also teaching here. But and then, sorry, Christoph, now if this area continues to hold, maybe we can look for double bottoms off of this if it continues to build. However, if the sellers continue to push it down and close below, then the daily candle is coming down and it's still aggressively selling. And then the trend is still selling, right? I verbally told you guys, this is a counter trade, right? We can't expect it to continue to just go up unless there's some massive news. It could develop at 10 a.m. when I told you there's that ISM manufacturing. So see how now gold is just consolidating right here for 10 more minutes until they drop that news. Okay, so with US30, we're still building here. Look at the size of the candles now since Wall Street market kind of opened. 925, 930, 935, 940, 940. They're no longer these little small candles. See what I mean? When markets open up, the volume really increases. This is when you need to decrease your sizing to make up for all of this volume. Okay, so now this red line, I know I'm out of the trade now, but it's still acting as minor support for it to maybe potentially to continue to build. Or we could just barcode into the news, right? Man, I want to continue to buy this. But it's got blue, black, blue, still holding. But what time is it? 9:51, 9:52 here. We're too close to that news. So I'm going to wait till 10 a.m. Okay, so look at how also US30 is positioning itself. It's positioning itself to sell prior to the news. What's gold doing? It's positioning itself to continue to buy off of this news, okay? I like how it's consolidating in here for maybe possible continuation to buy, but ultimately news will direct this and it's going to get volatile. So I'm going to sit myself out until 10 a.m. We'll go till 10:05. We'll watch the news. And then after that, I'm going to call it a session. Okay, guys? But hopefully you guys learned a little bit about price action. Hopefully you guys learned a little bit about top-down analysis. Hopefully you guys learned about trading with the trend and also trading against the trend. Hopefully you guys learned why it's good to patiently wait for the higher time frame areas to look for buy or sells. And that just following those rules can make you that much better of a trader every day. And also the rules of holding yourself back from buying or selling prior to Wall Street market open, COMEX, ISM manufacturing news, because anything can happen when they drop that news and it can be very volatile with big volume based candles. So it's better to just let the news pass and follow the volume after. You will eliminate mistakes, guys. That's what we have to do as traders is every day just try to reduce or eliminate our mistakes. We're going to make mistakes every day, no matter what, but it's our job to eliminate or reduce them. Okay. So if you have rules, you're already on your way to reducing mistakes. I know when the market teases you, it gives you a nice setup that you're used to, but you always got to think about it. You're just a few minutes before market open, or you're a few minutes away from high impact news. So it doesn't matter how good the setup looks. The news doesn't care about setups. Okay. The news will move with the numbers, and whether they're good numbers or bad numbers. And also the market could utilize that news to come and grab liquidity. So even if you see everything is lined up for a buy or sell and you go in prior and then it moves up with the liquidity, it could come down just as fast before you have time to react and you're in trouble. So I hope that I can illustrate this through to you guys on these live calls and you guys are learning alongside of us. And it just takes practice every single day. You got to practice this. Okay, and look at how US30 is continuing to build. It's holding the hourly support, building right back up. Could potentially take out the daily high and maybe come into the all-time high with the news. Okay, we're not too far away from it. But I'm going to sit out now. I'm on the sidelines waiting for news. Husky, welcome, Emirate. Yes, good point, Emirate. For any power hour traders, including myself, please be careful at 3 p.m. with QRA decision. It's going to determine the liquidity the Fed is going to pump or cut from the markets through repo markets. So absolutely. I am a power hour trader. I love scalping that hour. I will be extra careful as well, Emirate. Thanks for pointing that out. And guys, just before we get into that news, if you can join our free Telegram channel on YouTube, it's pinned at the top of the YouTube channel. We got 450 viewers. Thank you, guys. We'll give you the live links to our live sessions, the blog on how to trade gold like a pro, like how we did today. We did pretty good on it. We had some rules we followed. Also, we have a giveaway for joining the free Telegram and the AI trade ideas Telegram channel as well. Before and afters of our trade signals and setups, before and after, or analysis of what's going on Dave's sessions. You guys are welcome to join Dave Tuesday, Wednesday, Thursdays in the private Zoom, and also myself going Tuesday, Wednesday, Thursday this week in the private Zoom as well. So we're only doing one YouTube session this week today, unfortunately, but I want to spend some time with the snipers and get more private and where they can unmute their mics and they can talk. Like today, if you have any questions about what we did today, you're more than welcome to ask. And that's what I want to do on these calls, guys. I would like to make it more interactive so that I can hear you guys speak more and the other snipers in the group can hear you guys. And also, if you guys want to join our Discord channel and trade alongside all of our snipers in the group, there's some really, really, really good traders in there that are much better than Dave and I, and they are getting consistent profit across the board. So, and education, if you need education, there's a lot of education on our website, free blogs available, and indicators and all trade signals and ideas. Okay, guys? And also, guys, I am starting an SST Trading Academy. Okay, it's going to be for the folks starting in our Zoom and in our Discord. They have first dibs. Okay, all lifetime snipers are automatically enrolled. Okay, I'm creating the curriculum. It's going to be about 20 modules where it's going to be like a 2-day crash course, will be like 1 or 2 modules, and it will be like every 2 to 3 weeks. And then all of the modules will be uploaded on the website. So if you join us at a later date or you miss it, it will be uploaded for you guys. So our snipers will have first dibs on it. Dave and I will talk about it, but eventually we'll open it up to the public, to you guys on YouTube if you guys want. But it's something that we're interested in doing. We'll have the module also included with a 3-month membership at a discount if you guys want to join. But we'll see how we situate it, and I'm creating it right now. So it's going to have a lot in there. I think I wrote down in my notes as to what's going to be included in it. So I can kind of maybe if I find it here. I like to write a lot on piece of paper, and if I can find it, I also wrote notes on my phone here. Where the hell is it? This is what I do on the weekends, guys. Let's see if I can find it. Okay, I think I found it right here. Okay, so this is what I have. So the academy will be divided into progressive levels. Okay, students cannot advance until mastering the previous levels. So there's going to be guidelines, guys. For you to advance to the next module, you have to complete the previous modules, like a prerequisite, because I want everyone to follow along from the beginning, so you're not confused. This prevents information overload and builds confidence step by step. Okay, so level 1 will be foundations of financial markets. It'll be introducing the financial markets. What is trading, investing versus trading, active versus passive income, retail versus institutional traders, why markets exist, understanding liquidity, what I just talked about in today's call, and knowing buyers and sellers. Okay, then that will be like module 1. That will be like a 2-day crash course. And then the next one will be module 2, understanding financial instruments. So we'll talk about Forex, gold, XAUUSD, what we just traded, silver, oil. We'll talk about indices, stocks, ETFs, options, futures, and cryptocurrency. Module 3, we'll talk about the participants in the markets. These are banks, central banks, market makers, institutions, hedge funds, prop firms, retail traders, algorithms, and who ultimately moves the price of these securities. Module 4, we'll talk about trading platforms, okay? A lot of us are trading with different platforms, but we'll bring it all together. So the ones I'll be talking about are TradingView, MT5, NinjaTrader, Tradeovate, Interactive Brokers, Thinkorswim, a broker selection, chart setup, saving layouts, and utilizing hotkeys in trading, okay? Module 5, we're going to move into vocabulary. We need to learn the language of trading. So most of you guys understand, but some of you guys don't, right? If you're a beginner, what is the bid? What is the ask, spread, pip, tick, point, lot size, margin, leverage, commission, swap, slippage, liquidity, volatility, drawdown, equity, balance, okay? So that's going to take a long time to get through these modules. So this is what I mean. This is going to be an academy, okay? And then we're going to have it like a graduation exam. Then we're moving on. Hopefully all of you guys graduate. You understand that? And we're moving on to level 2. Level 2 will get a little bit more advanced and a little bit more now learning. So we're going to learn about futures trading mastery. We're going to learn about everything about the futures, history of the futures. We'll talk about the CME, COMEX, CBOT. We'll talk about contract specifications, expiration, rollovers on your futures contracts, margins, micro versus mini contracts, trading hours, settlement, delivery, tick values, order routing, the depth of market, volume. We'll talk about markets. So the different securities, ES, MES, NQ, MNQ, YM, MYM, RTY, M2K, GC, MGC, CL, NG. The list goes on and on. Okay. We'll talk about then Forex mastery in level 3, the history of Forex, major pairs, minor pairs, exotic sessions, London, Tokyo, New York, Sydney, cross pair correlations, carry trade, swap, broker types, ECN, market maker, liquidity providers. I can continue to go on and on and on. Guys, this is just a quarter of it, okay? I don't want to bore you guys, but then we move into the Gold Masterclass. So this becomes one of our SST flagship courses. We'll give you a brief breakdown of the history of gold, why gold exists, the gold standard, COMEX, why COMEX is so important for trading gold, the LBMA, central bank holdings, gold supply, mining, jewelry, inflation hedge, safe haven, interest rates, USD correlation, bond correlation, real yields, economic events, war, recession, geopolitics, seasonality, ETF flows, physical versus paper gold, institutional gold trading. I'm losing my voice as I'm reading this. We need to learn the different gold trading sessions as we're having this ISM manufacturing news right now. So US30 is breaking through here. We'll talk about Asian session, London session, New York session, COMEX Open, the London fix. We'll talk about all, okay, guys, I can't read all of this because there's a lot to go over, but right now we're moving. So gold look like it's still holding here. Okay, so it's moving. Well, let's see the news. What is causing this move right now? Forex Factory, the ISM manufacturing numbers. What just got delivered? 55.6. So it's higher than 50. Good. It's an expanding market, manufacturing market. It's above their forecast and above the previous month. So that's good, good, good. Good for the US dollar. Okay, so traditionally we should see the US stock market is moving. We should see gold selling. However, we don't. Okay, so gold is not selling. Why? Because it is at a level where it's discounted for buyers, okay? But you see how it came up? They're buying against the trend, even with that news. So it could come back down and continue to sell back down, okay? But this is in a no trade zone where it's just black, blue, black, blue, black, blue. So if you want to consolidate this entire zone, I would say like right around here, I would. Gold is not going to trade here all day today. It will eventually maybe continue selling off, which traditionally those are good manufacturing numbers. Gold should continue to sell off. However, it could, just come back up just a little bit before they sell it back down. So if you get a black candle, continue close below here, I would continue selling with today's trend and that news that they just dropped, okay? That's all positive news for the dollar. So gold potentially should be selling and more money should be moving into US dollar, right? And Dow broke for a new daily high. That's how far it is off of our all-time high and could get rejected back down. But this now zone is inverted and now we're showing some bullish zone still holding here, okay? Guys, that's it for me. Tomorrow, reminder, look at the scheduling, okay? So we are only going to be with YouTube now going forward for a little bit on Mondays, okay? And come September, we're going to be introducing our Tokyo sessions as well, and Wednesday webinar nights we're coming back. But myself and Dave, the rest of the week will be private Zoom with the snipers. Please come prepared if you guys have any questions. Unmute your mics, talk with myself and Dave. Friday is NFP. I don't have it scheduled. I do have to go pick up my brother-in-law, my sister, and my nephews at the airport Friday morning. So unfortunately, I won't be able to stream NFP with you guys. So please trade careful on Friday, okay? Tomorrow, we are post Dave. So Dave will be doing COMEX and Wall Street all week, and then I'm coming in after him, okay, guys? So I hope you guys learned something on today's call, okay? Whether you bought or sold with us or you're just on the sidelines learning, whatever you did, it is a Monday, so be careful trading. I saw some of the snipers in our group hit daily goals and definitely be done for the day. And let's move that into tomorrow, okay, guys? Don't revenge trade. Don't do anything silly. If you make some mistakes, remain composed and disciplined, okay? You do take losses as traders, but you can control your losses. You need to control the way how you trade, okay? Don't get reckless. Don't get mad at the markets. If it doesn't agree with your setup, then follow the volume, okay? And guys, thank you. So everyone on YouTube, please subscribe to the free Telegram so that you have all of your links available in there. And if you want to join the team, you can still take advantage of the 50% off promo using that end of July code. I know we're in August, so it's extended. So if you want to take advantage and join us at 50% off, you get everything with SST, okay? And then also the free blogs are available. Read this one, How to Trade Gold Like a Pro. It's a complete beginner guide. Like, I would love to go over this with you guys, but you'll learn exactly what is gold. So before placing the first trade, is important to exactly know. XAU is the international symbol for 1 troy ounce of gold. USD represents a US dollar. That's why it's paired, XAU USD. For example, you have examples if it's 3,600, this means 1 ounce of gold is worth 3,600 USD, okay? Why gold is one of the best markets to trade? So it offers excellent liquidity, large daily price movements, strong technical respect, consistent volatility, opportunities nearly every trading day on gold, okay? What makes gold move? So many beginners think gold moves randomly. It doesn't. Gold responds to changing economic conditions around the world. Some of the biggest drivers include interest rates, what we had last week on the FOMC, inflation numbers that will be coming out, CPI data, the US dollar, the DXY, right? The inverse, the correlation, the inverse correlation. If a strength in US dollar, gold sells. If it's a weak US dollar, gold strengthens. Understand your treasury yields. Every so often we have a 10-year and a 30-year bond auction. Understand yields, how they affect the US dollar and gold. Geopolitical events, wars, Iran and US war ongoing, political uncertainty in the Strait of Hormuz, Banking crises and global instability, okay, often drive investors toward gold as a safe haven asset. Examples include military conflicts, financial crisis, banking failures, political instability, trade disputes, central bank buying. The best time to trade gold. Sorry, professional traders don't trade gold all day. They focus on periods of high liquidity. 3 major sessions: Tokyo session, okay, the London session, the New York session are the most active, and COMEX session. So understanding market structure, understand bullish structure, higher highs, higher lows, bear structure, lower highs, lower lows. So support and resistance, how to identify zones, your candlestick confirmations, your pattern recognition, understand your bullish and bearish engulfing candle, ignited candles, pin bars, hammers, what they are. They're your rejection candles. Understand double bottoms, double tops, things like that, liquidity grabs, okay? And then we have an SST entry process. Step 1, identify the higher time frame trend, top-down analysis. Step 2, mark key support and resistance zones, either points of interest or zones. Step 3, wait patiently for price to reach your area of interest. Set alerts. Step 4, look for clear candlestick confirmations. That's why learning price action, the language, will help you out as a trader. Finally, step 5, calculate your risk before entering. You should know your risk before entering a trade. You shouldn't be guessing how much you're risking while you're in the trade. It should already be calculated. That's why that measuring tool is so effective in trading. Only after these steps should a trade be considered, okay? Consistency comes from following a repeatable process, not from constantly searching for new strategies or jumping from YouTube channel to YouTube channel and just looking for buy and sell signals. Learn how to do this. It's a process, okay? Risk management as a retail trader is your greatest edge in the markets, okay? If you learn risk management properly, you can become a very consistent and profitable trader over time, okay? A lot of traders that are not profitable at trading, they have no risk management skills. They don't respect their risk management. They are gambling, okay? You're not going to survive in these markets gambling every day. I don't know too many successful gambling traders. So every trade you have should have a defined stop loss. You saw mine on trades today. I had defined stop loss. I had a realistic profit target. I had a favorable risk to reward ratio, 1-to-1, 1-to-2 on my money. But you also saw how I reduced my risk to ultimately break even while I was in profit, okay? Position sizes that matches your account size and risk tolerance. I use a position size that matches my account size. You need to use a position size that matches your account size, okay? My account has nothing to do with you, nor does your account have anything to do with me, okay? I don't know if you're trading with $100, $1,000, $10,000, or $100,000 or $1 million. Everyone should have their own risk tolerance, okay? And one trade should never determine the future of your trading account. So sometimes there is traders at full port news and they go all in, but again, that's not trading, that's more gambling, okay? So protecting capital allows you to stay in the game long enough to develop consistency. Common mistakes new gold traders make: trading without a plan, ignoring market structure, chasing missed moves, trading immediately before high impact news. What did we just see today? Moving stop loss orders emotionally, using excessive leverage, over trading out of boredom, entering trades without confirmation, focusing on being right instead of managing risk, okay? Pro traders understand that patience is often their biggest advantage. Develop the right trading mindset. Psychology is massive in trading, especially for retail traders. Okay, trading is as much psychological as it is technical. Successful traders accept that losses are part of the business. The goal is not perfection. The goal is consistent execution. So focus on your discipline, patience, learn emotional control, follow your trade plan, and you'll have continuous improvement over time. Okay, guys, so that's the blog, right? I just went over, and we have a video as well on YouTube. So if you go on YouTube, there was a video we uploaded yesterday. It's about 30 minutes where I talk about this and I go into the charts about it. So if you're a beginner, it's a great little video to get started learning, okay? If not, join alongside of us and subscribe to this channel. Hit the likes, guys. And we'll see you again, YouTube. We'll see you guys next Monday. And for everyone on Zoom, I'll see you guys tomorrow morning alongside Dave. Have a great rest of your Monday and enjoy the rest of your day. And we'll see you guys tomorrow. Have a great day, everyone. Thank you guys so much. We'll see you guys tomorrow. Thanks, guys. Have a good day, guys. Husky, Emrit, Kira, Sang, Mohamed, Christoph. Have a good day, guys. Daniela, Boom, Mike, Justin, Remy, Simon, Tammy, Joseph, have a good day, guys. Sherry, have a great day. Thank you guys so much. Enjoy your day. Take it easy, Dale. Have a good day. Everyone on YouTube, enjoy the rest of your day too. And subscribe to our channel. Join SST. There is still the 50% off promo. You can get in on all the private sessions. If not, we'll see you guys next Monday morning. Have a great rest of your week. Thanks, guys.